بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين نبينا محمد وعلى آله وصحبه أجمعين رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي. Excellencies, distinguished guests, industry colleagues, my brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuhu. And a very good morning, good afternoon, and good evening to all of you joining us from different parts of the world. On behalf of Accounting and Auditing Organization for Islamic Financial Institutions, its partners for this particular event, TKBB, Participation Banks Association of Turkey, and Public Oversight Accounting and Auditing Authority, KGK. We welcome you to this public hearing, this virtual public hearing on a very important financial accounting standard, FAS1, which is on general presentation and disclosures in financial statements of Islamic banks and financial institutions. I'm in particular thankful to TKBB and KGK for the support they have extended for us to organize this important gathering. It's a gathering where we seek feedback, comments, and views on the exposure draft of a standard that we are in the process of finalizing. So it's a very important event for us in particular. The flow of the event is as follows. There will be a welcome address by the Secretary General of TKBB, or Participation Banks Association of Turkey, Mr. Usman Akiz, followed by welcome remarks by Public Oversight Accounting and Auditing Authority, and a brief introduction of AAOIFI by myself before we go in deep into the standard or the presentation of the standard itself. So before any further ado, the session is actually between 1 p.m. and 4 p.m. Today. So the official presentation of the standard should commence from 15 past 1, inshallah. So before any further ado, let me welcome the Secretary General of TKBB, Mr. Usman Akiz, to deliver his welcome remarks.
Salam alaikum.
Salam.
Wa alaikum assalam, sir.
Bismillahir Rahmanir Rahim. Distinguished guests, ladies and gentlemen. Warm welcome to online public hearing session organized in collaboration with the Accounting and Auditing Organization for Islamic Financial Institutions, Participation Banks Association of Turkey, and Public Oversight Accounting and Auditing Standards Authority. I would like to relay our sincere greetings to all participants on behalf of Participation Banks Association of Turkey. As we globally recognize that standardization has been carrying its significant role at the development of Islamic financial industry, we need to continue our collaboration on this topic for the enhancement of activities of Islamic financial institutions. We believe that standardization will improve customer perception and transparency at respectful jurisdictions. We would like to share our sincere thanks and appreciation to AAOIFI for enabling industry to move forward with standardization responsibility, and wish to keep our support for the upcoming standards. As TKBB, we do highly appreciate our collaboration with AAOIFI and significantly benefit from its publications and standards. We take AAOIFI standards as reference for the development of our local standards and decisions at related cases. As TKBB, we also published 2 times Turkish translation of AAOIFI standards and distribute it to participation banks, public institutions, and universities. We strongly believe that all those mutually beneficial cooperative activities will increase the standardization's awareness in Turkey and international Islamic finance industry. Today, at this webinar, AAOIFI will present its upcoming standard related to AAOIFI financial accounting standards. We expect your kind attention and contribution to ensure the final standard is comprehensive. And during this virtual webinar, if you have any views, feedback, and comments on the presented exposure draft, please share with the team before it finalized. Wishing a very fruitful and insightful discussions of the related exposure draft. With this opportunity, hope to increase awareness of standardization at the industry. Kind regards to all participants. Thank you.
Thank you very much, Mr. Secretary General. It's an honor and pleasure. Thank you very much for sparing the time and being with us. It signifies the importance that TKBB and the Turkish market puts on public hearings on these important standards. And as you rightly mentioned, it's only through comments and feedback that we receive through these webinars and these public hearings that we are able to put together a standard that is comprehensive and complete. And in particular, we are very thankful to the support that TKBB has provided to AAOIFI in terms of translation of its standards and the efforts that we have been part of together. We also have an MOU in place, which we are very thankful for yourselves. And we hope through that we can move or take the flag or flag of standardization of the practices forward for the benefit of the Turkish market as well as for the global Islamic banking and finance industry. So thank you very much for being with us, and thank you for your very encouraging welcome remarks.
Okay, thank you very much. It's our pleasure to for us. Okay, thank you.
Thank you very much. Now, moving on, without any further ado, let me invite our colleagues from Public Oversight Accounting and Auditing Authority to deliver their welcome remarks. I think they will be delivered by Brother Mehmet Shireen. Brother Mehmet,
yeah,
there?
I am here.
Excellent.
Assalamu alaikum. Thank you, Rizwan.
Wa alaikum assalam.
A'udhu billahi mineşşeytanirracim. Bismillahirrahmanirrahim. Allahümme salli ala Seyyidina Muhammad wa ala ali Seyyidina Muhammad. Good afternoon, everyone. On behalf of Public Oversight Accounting and Auditing Standards Authority of Turkey, I would like to welcome and thank each and every one of you for attending this virtual public hearing event today. My name is Mehmet Şirin, and I am the head of Accounting Standards Department of the Turkish Public Oversight Authority. Let me first say, I hope that you and your families and your communities are staying healthy and safe. Before we get started, I would like to express my sincere appreciation to the Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, for organizing this important public hearing event. I would also thank Participation Banks Association of Turkey for their valuable efforts and collaboration. I want to start by giving some brief information about Turkish Public Oversight Authority and the application of AAOIFI standards in Turkey. In order to ensure a more effective auditing and public oversight system, the Public Oversight Authority was established in November 2011. Our organization is responsible for achieving an effective public oversight system in Turkey. We are also responsible for setting standards that ensure the preparation and auditing of financial statements in compliance with international standards. In order to establish a high quality and reliable financial reporting and auditing environment, our organization has four main functions, which are setting accounting standards, setting auditing standards, authorizing and registering auditors and audit firms, overseeing, inspecting, and enforcing auditors and audit firms. Regarding the standard setting functions, an agreement was signed between AAOIFI and Turkish Public Oversight Authority in September 2017 to ensure that the accounting, auditing, ethics, and governance standards published by the AAOIFI were translated into Turkish language and placed in Turkish legislation. In this way, it is aimed to increase the quality of financial transactions related to Islamic financial sector and to raise awareness about these transactions by contributing to the development of Islamic financial sector in our country. At this point, all of the existing auditing and accounting standards other than Islamic insurance standards are translated into Turkish language and issued. Again, I want to repeat this. At this point, we are issued all of the existing and auditing and accounting standards other than Islamic insurance standards are translated into Turkish and issued in the official Gazette. Islamic financial institution in our country can voluntarily apply them while preparing their financial statements. Now, let me move the purpose of today's event. In today's gathering, we will be focusing on the exposure draft of AAOIFI Financial Accounting Standard, FAS1, General Presentation and Disclosures in the Financial Statements of Islamic Banks and Financial Statements. This exposure draft is a revision of existing standard, and it improves the accounting treatment in line with global best practices, set out the overall requirements for presentation of financial statements, describes the minimum requirement for the content of financial statements, and suggests a recommended structure of financial statements that facilitate faithful presentation in line with Sharia principle. The revised FAS1 has been formulated to aid both Islamic financial institutions and other institutions that are desirous to adopt the AAOIFI financial accounting standards for accounting and reporting purposes. The revision of FAS1 is in line with the revised AAOIFI conceptual framework for financial reporting and aims to assist preparers to produce financial statements that are sound, clear, and understandable, and which will aid the users to take a better economic decisions. If I sum up all of the conversation, well, I don't want to take much of your time, but thank you for everyone for listening to me. I wish you and your families my personal best for your health and safety in these difficult times. I hope we will meet in person at the upcoming public hearing events, and we will be glad to welcome you in Turkey, inshallah. Now, I will give the word to Mr. Rizwan Malik again. Thank you very much for everything, and I appreciate your efforts for this public hearing event. Thank you.
Thank you very much, Mr. Mohammed Shireen. It's a pleasure to hear from you. We, like yourself, thank you very much for giving an update on the standards and the translation work that KGK is doing. So we thank you for all the support that KGK has provided by representing on the technical board of AAOIFI and all the work that you're doing for the growth and development of the participation finance in Turkey. We really look up to you. So thank you for the leadership role that you have personally played as well in this particular capacity. And you were a board member as well at AAOIFI. And inshallah, we look forward to having more and more collaboration going forward.
Inshallah.
Before we begin the introduction of AAOIFI by myself, we are glad to have the participation of our Board of Trustee member, Professor Najda Sensoy. And I was wondering if you would like to use the opportunity to say a few words and share some words with the audience, inshallah. Professor Najda?
Also, I wish the best for all the participants. Assalamu alaikum from Turkey. I am very happy to have this meeting in Turkey. Actually, really not in Turkey, but through Turkey. Mehmet Şirin was my student in the university, and I am proud of him. And he is very hardworking in this area and supporting our activities. Without talking too much, let me say, let me send my greetings and best wishes to all. Assalamu alaikum.
Wa alaikum assalam. Thank you very much, Professor. It's a pleasure to have you be part of this as usual. So thank you for sparing the time and being with us. It's only through leadership like individuals like yourselves and support that AAOIFI is able to do what it is doing. So thank you very much for that. Going to... Okay. We are just going to move, just going to start with a little bit of introduction of AAOIFI before we commence the proceedings of the day. And I'll try and be very brief in this, inshallah. Just trying to make sure the screen works. Okay. So Bismillah ar-Rahman ar-Rahim, again, our huge appreciation and thanks to TKBB and KGK for partnering up with us for this important event for AAOIFI. And I think only through these events that we are able to put together a standard that is comprehensive and complete. And I'm also thankful to more than 600 registrations that we received for this particular public hearing, a lot of them from Turkey, of course, and Europe, but also from other parts of the world. So thanks to the Zoom-like platform, which allow us to connect, although we look forward to having or meeting everyone in person as well, inshallah, when time permits. Now, just a little bit about intro on AAOIFI. AAOIFI, I'm sure a lot of people are aware, but hearing it from our point of view, from AAOIFI's perspective, it's always encouraging. So as everyone knows, AAOIFI started as a not-for-profit organization. It still remains a not-for-profit organization in 1991 with a view to develop standards and promote standardization of practices of Islamic financial transactions for the global industry. And as we speak, it develops standards in 5 particular areas. These are Sharia, accounting, auditing, governance, and ethics. And in these 5 areas, AAOIFI has issued about 116 standards and technical pronouncements. AAOIFI, of course, started with 6 founding members, but it grew its membership to about 140 members over the years. These 116 standards and technical pronouncements that have been issued by AAOIFI are adopted or adapted or used as guidance in more than 40 jurisdictions around the world. And of course, these standards have been translated into multiple languages as we speak, and I'll go into the detail in a bit. Other than the standards development work that AAOIFI does, which is huge, of course, AAOIFI also puts in effort into the implementation or providing assistance in the adoption of these standards. And we do that through the capacity building programs that AAOIFI has in place, as well as the advocacy and the awareness programs in the form of events and workshops that AAOIFI puts together. AAOIFI also has publications in the form of an academic publication, a biannual publication that AAOIFI publish on a periodic basis called JOIFA. That's an important publication. So as I said, AAOIFI develops standards in 5 particular areas. These are areas that are not unrelated, rather we say that these are interrelated, and the idea is they are interlinked in that sense to in the way to form a package of standards for the regulators to adopt, regulators who has the intention to protect and enhance the integrity of Islamic financial offerings in that sense. So to begin with, the Sharia standards are the foundation of of all the standards that AAOIFI does, and these are the standards which differentiates halal Sharia compliant versus Sharia non-compliant, and those which are gray area. So these standards, the Sharia standards, bring uniformity with respect to Sharia principles and rules, i.e. what is permissible, what is not permissible, and what is in the gray area. This sets the foundation for our accounting standard, which generally brings uniformity in the presentation, recording, and reporting of Islamic financial transactions to be in line with the Sharia principles. The governance standard AAOIFI issues are there to ensure that the systems and infrastructure is developed which enhances or encourages or facilitates the implementations of Sharia principles and rules. The auditing standards that AAOIFI issues are there to bring uniformity in the assessment of the recording and reporting of Islamic financial transactions. And the ethics standards are there to, it's a reminder, it's a continuous reminder for us to how to conduct ourselves and our business in the best of manner. So the ethics standards bring unity and uniformity in the letter and spirit of the application of all standards. So as I said, these standards are not unrelated, rather these are interrelated areas, and one area feeds into the other area in a very complementary manner. So that's the AAOIFI has, as I said, issued about 116 standards in these 5 areas, and it continues to do a lot of work in these particular areas. In terms of the standard adoption, AAOIFI put together, prior to last year, AAOIFI did not know in how many places AAOIFI standards are being adopted. So last year, we put together a very comprehensive study with the help of regulatory bodies from around the world, which helped us quantify the adoption of AAOIFI standards around the world. These included those regulators which adopt AAOIFI standards fully, like country like Bahrain, where AAOIFI standards become part of the law as soon as they're issued. These include countries where AAOIFI only one set of standards are mandatory. For example, a country like United Arab Emirates, where AAOIFI's Sharia standards are mandatory, and all Islamic financial institutions have to adopt them. These also include countries like Oman, where AAOIFI's accounting and auditing standards are mandatory, and all Islamic financial institutions have to adopt them. Additionally, there are countries like Pakistan who basically develop their local standard based on AAOIFI standards, so there are partial adoption. Similarly, there are countries which base their local standards on AAOIFI standards, some of the things that were mentioned by the Secretary General of TKBB and Mr. Mehmet as well. So in general, we go to a conclusion that AOFI standards are, partially, fully, or used as guidance are either adopted or adapted in more than 35 jurisdictions around the world, and 43 jurisdictions around the world, and about 35 countries across the globe, which is again a huge achievement for the work that AOFI has done in the last 30 years. As I said earlier as well, AOFI standards have been translated into multiple languages. These include, of course, Arabic, English, French, Turkish with the help of TKBB, as well as Urdu. And we are in the process of having it translated into a number of other languages, which includes Bahasa Indonesia, Bengali, and Mandarin. This is to ensure that the adoption of AOFI standards become easier for the local regulators and for the local stakeholders to use them either as a guidance or the reference material. Now, as I mentioned that AOFI helps or assists in the implementation of AOFI standards through its capacity building programs, through its awareness and advocacy programs. So I'm sure most of you are aware of the professional qualifications that AOFI offers, the Certified Islamic Professional Accountant and the Certified Sharia Advisor and Auditor. These two qualifications have also become a part of fit and proper criteria for regulatory bodies, regulator like of that Central Bank of Bahrain, just to give you an example, have made it part of their fit and proper criteria. So you cannot be an accountant or a CFO of an Islamic financial institution in Bahrain if you don't have a SIPA qualification. So similarly, CSA we have is gaining more and more importance, and it basically helps you understand the Sharia standards in a more meaningful manner. The SIPA and CSA, both qualifications, we have more than 2,000 professionals who have passed both the qualifications, and the SIPA qualification or the curriculum is being translated into Russian language, and in due course we hope that we can make it available in other languages as well. The CSA qualification, we are in the process of dividing them into two parts: the Certified Sharia Auditor and Certified Sharia Advisor. In terms of publication, as I said, there are two. There's an academic publication in the form of biannual academic journal. We call it JOIFA, Journal of Islamic Finance Accountancy, which we issue. And again, it's an important publication for us to to use it as more of a engagement with the industry, and it feeds into also our standard development process. AOFI, the footprint report that I mentioned is this one that we put together last year, which helps us help us know about the adoption status of AOFI standards globally. AOFI has also started the AOFI newsletter, which is again a biannual thing that AOFI is doing to ensure that the market stakeholders are well aware of the developments in AOFI. Of course, AOFI organizes a number of industry events in the form of two international conferences and events. Due to COVID-19 last year, we had to do them virtually, but inshallah, we hope that we can get back to the routine of organizing, maybe going forward, both virtually and physically. It helps us, the global audience to benefit from the deliberations. Now, that's it in general, the intro of AOFI. Before I hand over the floor to the Secretary General of AOFI, Mr. Omar Mustafa Ansari, let me put a little bit of a highlight or the focus on why we are here together. And something that the Secretary General of TKBB and Mr. Mehmet clearly mentioned, today's gathering is a very important opportunity for AOFI. It's a gathering, it's a very important part of the standards development process that AOFI has in place, because as you can see, the standard development this is a standard development process which starts from here, where we make a working group on a particular standard, which basically reports to the technical board of AOFI, and it moves into different phases before we get to an exposure draft stage. An exposure draft stage is a standard-like document which is generally presented to the audience in an event like this today, to gain the feedback and feedback, comments, and general guidance on the content of the standard that we are about to present. So it's a very important standard. Once we have the feedback, comments on the standard itself for the exposure draft, these comments will be incorporated within the final document for us to ensure that the final document is very important. So there are more stages to go, but today's event is very important for us. And we organize these events in different parts of the world to ensure that different type of audience and stakeholders are there, and we have their feedback in that sense. So just a little bit, again, as I said, I mean, it's an opportunity for AAOIFI to present its exposure draft and for the industry stakeholders to share their comments and feedback on it. Our role as AAOIFI is to explain and elaborate on the core content of the standard, right? It's a very simple and easy thing. That's our job. Just to highlight, your role as an attendee is to provide comments, opinions, recommendations, views, and suggestions on this exposure draft. And this can be in terms of highlighting missing information from the exposure draft, either completely or something that is not completely presented or covered, or something that may be factually incorrect in that sense, or even if there is a grammar mistake. So you can highlight that. We will only appreciate. The more feedback that we receive, the better it gets for us. Of course, if you have an opportunity to go through the exposure draft, even after the public hearing is done and you are unable to share the feedback, please write an email to us. Please do share your feedback on this email, accounting@aaoifi.com, for this particular accounting related standard. So we would only be thankful and encouraged by your comments and feedback. And of course, today's session is again an opportunity for you to share your feedback, ask questions, seek clarification if there is required from your point of view. Before I hand over now, some housekeeping rules generally. Of course, the session is being recorded to ensure that all feedbacks are received. The slides that the Secretary General of AAOIFI will present, these are basically from the exposure draft itself. So there are no other slides that we generally share with the attendees. You, of course, will be kept on mute during the session, but in case you have any questions, you can either use the Q&A tab at the bottom of the screen, or you can raise your hand and we can allow you to ask your questions through voice. For AAOIFI fellows, it's a very good thing that this webinar is being recognized for one AAOIFI CPD hour. And the last thing from my side is that if you have any other suggestion for AAOIFI, or you would like to become a member, or you would like to have a collaboration with AAOIFI on the standard development side, standard implementation side, on the capacity building side, please reach out to us either on this email address, membership@aaoifi.com, or you can write to me at rmalik@aaoifi.com. So with that, thank you very much. We are glad to have you, and inshallah, we hope that this will be a very interactive and engaging session, which is mutually beneficial for all the stakeholders involved, inshallah. Here. So thank you very much. With that, I hand it over to Mr. Umar Mustafa Ansari, the Secretary General of AAOIFI, to formally present the exposure draft of the standard. Thank you very much.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, brother Dr. Rizwan Malik, for very again, there are a lot of activities of AAOIFI, so even a brief presentation of that cannot be as brief, because alhamdulillah, we are doing a lot of activities. I would like to thank the co-hosts of today and our senior dignitaries who are attending the event today. Thank you very much, all of you, for your collaboration, for your support, for your guidance, and for being here and supporting us. When one door is closed, that Allah subhanahu wa ta'ala open more doors. We can see that holding physical public hearings has been difficult in last one year or more. But Alhamdulillah, our webinar-based public hearings, Alhamdulillah, are very successful. You can see that we have around 235 participants, and it is the second public hearing of this one. And even the last public hearing, there were 200 plus participants. So we are so happy that Allah subhanahu wa ta'ala has provided us this opportunity to keep AOIFI connected to the industry, to enable us to take your comments, your guidance, your support for the overall standard setting process. I remember our governance board chairman, earlier governance board chairman, Dr. Ishrat Hussain, who has his own very much contribution to Islamic finance. He used to say one very important thing, which I repeat, that standard setting is not something that can be done in a room where some learned people sit and set standards. Standard setting happens when you actually keep yourself connected to the industry in all phases, like getting the best suitable people as working group members, having the most senior and most learned experts from around the globe to be part of your board. But it's not sufficient. You have to go back to the market. You have to learn what market says. You have to understand how people perceive your standards, because it's not some exercise that can be done primarily by sitting in a boardroom and trying to impose something that is not understandable to the industry. So with that, we have got a lot of discussion on the importance of this one, but let me take you directly to the most important standard. Why I say most important standard on the accounting side, because it's our financial accounting standard 1, which talks about general presentation and disclosures in financial statements of not only the Islamic banks, but the new model. Actually, the earlier standard also talked about Islamic banks and financial institutions, but the new structure of this exposure draft. And let me clarify that this exposure draft has been issued second time. We issued the exposure draft in 2019, but then we realized that this is exposure draft because we were working alongside on the new framework, and we realized that there are additional factors. So we revised the exposure draft for multiple reasons. The first one was there were consequential amendments to other standards which we wanted to be included in this standard, and inshallah we will discuss them today. The second part was making sure that whatever is commonly applicable to all type of Islamic financial institutions, that is Islamic banks, Islamic mutual fund, Islamic insurance, that is takaful, and even social finance institutions like Waqf. So whatever is common should be contained in this standard, and then whatever is specific to Islamic banks and similar institutions should be identified separately. So even in going forward, even the takaful standard and other standards will have a reference to this standard. We have issued the takaful general presentation and disclosure exposure draft also, which makes a reference to this standard, that whatever requirements this one has on a overall basis, those shall be applicable to all type of institutions. That's so I would say that this standard is the mother standard for all our financial accounting standards for Islamic financial institutions. And if you read it with the framework, because both of these are part of the same project, so this will provide you a complete background, again, detailed accounting treatment of different products is in different standards, but with regard to the overall concept, objective, structure of financial reporting for Islamic financial institutions in this document read with the AOIFI framework document, which is finalized in 2020. With that, I just would like to mention that this is a very long standard. Long standard means that it's very comprehensive. It covers so many aspects. So what we need to do is that I will be taking you through the whole of the standard, but I will not be stopping and reading out all the areas. I will stop at and I will read out at all the important areas that we believe need your input, or on which we need to develop a consensus within the industry. So I will discuss those with you. But other areas, you are always open to give your comments. So if you feel any slide or any paragraph that I don't want to discuss in detail, still you feel that there is some important aspect there, you want to add some comment, you want to give some improvement suggestion, please feel free to provide your comment. As Brother Rizwan said, that raise your hand if you want to talk yourself, or otherwise put the questions in the question answer tab, not in the not in the chat tab, because at one place, if they are all placed at one place, that is a question answer tab, it is easier for us to keep a track of them and to respond them one after another. With that, I would not go for all the details on the preface and introduction, but I will take you through the very important aspects of rationale for issuing this standard and the fundamental changes from the previous FAS1. The first thing is that AAOIFI developed a new strategy for accounting standard setting in 2015-16. In the 16, it was finalized. To 2015, we developed, and 16, it was finalized by our newly appointed accounting board. And the strategy says that we want to reduce our differences with the conventional accounting sectors, that is International Accounting Standard Board and others. And we want to develop standards only in the areas where developing a standard is necessary and it is a value addition to the industry of Islamic finance and value addition to the accounting profession. So in this respect, we decided very clearly that unless there is a standard that is needed by virtue of a specific Sharia requirement or by virtue of Islamic finance transactions having a different characteristic and risk profile from the conventional transactions, these are the only situations where we will develop our standard. So it has to be value added based. So in this standard, you will see that towards the end, we will discuss that we are going to withdraw some of the standards. And there are some other areas where we do not want to develop a comprehensive standard. So we have touched upon in this FAS1 on those areas rather than developing a complete standard for that area. I'm just giving an example that, for example, on the segment reporting, presently we have a standard, but by virtue of this standard, we would like to withdraw the standard on segment reporting, and we would say that segment reporting standard that is issued by AAOIFI is good enough, and there are no significant Sharia implications, and there is no significant value addition that AAOIFI can add. So considering that our framework, we want our framework to be as close as possible to the conventional accounting framework and should be doing part rather than confusing the market. So this is just one example, but when we go through this standard, we'll find more examples. So this is if you see that according to this strategy, we actually revised the conceptual framework and the FAS1, and we conducted a comprehensive FAS review and revision project in 2018, which had comments on multiple standards, and we conducted roundtables, surveys, multiple activities to make sure that we listen to the market, what they feel about our standards, where they feel there is a need to improve for improvement. So additionally, this conceptual framework, the conceptual framework and this standard have a very clear link. They are interlinked. So we decided that this should be done in a single project by a single working group. But first, obviously, we have to finalize. You can well understand that framework has to be finalized first and then FAS1. So we initially issued exposure draft for framework and then for FAS1, and then we issued this revised exposure draft for FAS1 on which we are conducting the public hearings, while the framework has been finalized in 2020 and it has been issued. So what are the significant changes? One very important change is that revised conceptual framework is now an integral part of AAOIFI FASs. Earlier, the framework was not considered to be an integral part, although that some of the standards, particularly old FAS1, was also referring to the framework. But the problem was that we have seen in some of the markets where when we do not have a specific standard and we allow them to refer to IFRS or other generally accepted accounting principles or the local accounting standards in case of Turkey, for example, in that situation, the problem was that AAOIFI framework was ignored. So at times the link between that type of transaction reporting versus our other financial reporting standards was broken. It was not on the same lines. We had received in past several questions from the market, and on some of which we issued some technical releases also, and there were some standards. For example, Wakala standard is comparatively a new standard. So Wakala treatment in the books of the financial institutions was different and was more in line with the conventional accounting standards rather than the conceptual framework. So we believe that it's important that the conceptual framework should be integral part of AAOIFI FASs, and we did it. There is a hierarchy of selection and adoption of accounting policies that we will discuss when we go through the standard. The second point is about quasi-equity. I can see there are some questions, but as soon as I complete the significant changes part, then I will take all the questions related to this section or the initial preface section. Definition of quasi-equity is introduced. It was introduced in some of our earlier standards, more recent standards, but earlier our FAS1 and the framework were mainly talking about the equity of unrestricted investment account holders. We believe that Islamic finance industry has developed significantly in recent past, and now there are more types of quasi-equity instrument rather than only the equity of unrestricted investment account holders, URIA, what we call normally. For example, there are some sukuk which may be equivalent to that type of structure, or there can be some structured transactions that can be considered as quasi-equity instruments. So we brought in a definition of quasi-equity, and we clarified this thing in the framework as well, and then we clarified this thing. So in earlier standard actually talked about equity of unrestricted investment accounts, while new standard talks about quasi-equity, which includes as a major component the unrestricted investment accounts, but it includes other aspects as well. Similarly, we clarified on the things of off-balance sheet assets under management, because earlier there were only a restricted investment account that were considered in that heading, but now it can be wakala and some other instruments also. Definitions have been modified for cash and cash equivalent, income and ijara, and a lot of other definitions are also been modified, but these are some of the important definitions, and we have brought them in line with the recently issued AAOIFI FASs. The concept of comprehensive income has been introduced. It was one of the major criticism on AAOIFI standards that AAOIFI did not have a comprehensive income, while nearly 10-12 years back, IFRS brought in the concept of other comprehensive income, or either as a single statement of comprehensive income or as a two separate statements of income statement and the other comprehensive income statement. This concept was brought in. It's no more new, but it was new in the accounting profession, because earlier these things were taken to statement of change in equity. But AAOIFI has been considering this concept from last several years, and it was not immediately decided because there were issues with regard to quasi-equity and other components of equity as well, which we wanted to take a clear view. So we, instead of rushing onto it, rather we kept this issue pending till the time we finalize on the FAS1, after considering the finalizations of some other important standards that we have done in recent past. And now we have brought in a concept of comprehensive income, and which means that there are a lot of consequential amendments to our other standards, particularly where our standards were talking about the fair value gains or losses and other components going to equity directly, which are under IFRS and other frameworks taken to the other comprehensive income. We have brought in this concept, so the consequential amendments in our other standards were necessary, and the consequential amendments have become part of this standard, which we are going to discuss today. Institutions other than financial institutions are now allowed to use the current and non-current distinction, etc. Even I would say the name of the standard is now the framework. The name of the framework was also changed to make sure that that some other institution other than purely financial institutions can follow AAOIFI standards, and the Islamic finance transactions structured on the basis of sukuk and other instruments can also apply that. So we believe that we need to provide that flexibility, that although primarily AAOIFI's scope is Islamic financial institution, but there are social finance institutions. So there are Islamic finance instruments that are not typically in the definition of Islamic financial institutions, but are important and should be part of the AAOIFI framework, and we need to provide guidance, etc. on that. So framework and FAS1 comprehensive standard included that. Disclosure for Zakat, charity, and Qard fund have been relocated to the notes. Earlier, these were primary statements in our old FAS1. After due discussion, the board decided that these are mandatory disclosures, but these should not be considered as primary statements. Rather, these should be considered as significant notes and mandatory notes in the financial statements. True and fair override has been introduced to facilitate the institutions. This is institutions when there is a fair and true issue, and this is in line with IFRS also. The section on accounting policies and accounting estimates have been strengthened, and we have provided some of the treatments with regard to the change in accounting policies and estimates and correction of errors, which include allowing the option of third balance sheet. Our earlier financial statements, our earlier FAS1 was not having the option of third balance balance sheet, but now we have that option in line with which is getting closer to IFRS. And as I mentioned, that it is divided into multiple parts, and which some of them are applicable to all institutions. One part is applicable to Islamic banks and similar IFIs, and other part is about the authoritative status, etc. With that, I would like to take questions and comments on this part. I can see some questions and answers Q&A coming here. So let me handle them first, and then we will see if anybody want to mention something by themselves as well. Assalamu alaikum. This is Brother Muhammad Iskil Lawal. Assalamu alaikum. Since the conference is discussing auditing in Islamic financial institution, I hope it will cover Islamic insurance, takaful, and not only Islamic banks. And I notice banks are not only being mentioned here. I think that clarification is that it's not auditing, it's accounting. It's accounting standard, not auditing standard. But as I mentioned, the part A is applicable on all Islamic financial institutions, means that it applies on Islamic banks and takaful also. And for takaful, we have more recently issued a separate exposure draft replacing our earlier FAS12. And you are welcome, more than welcome, to provide comments on that one as well. And inshallah, we will be holding public hearings on that shortly. But even in the meanwhile, you can go and access our website and you can provide your comments in writing on that standard. Mr. Brother Rahmatullah, Assalamu alaikum. I'm Rahmatullah, lecturer Islamic Banking and Finance at Iqra University, Karachi. I would like to ask that does definition of asset in FAS1 covers the right to use asset? The quick answer is that yes, right to use asset is included in FAS 32. So it includes it is included in FAS1. The definition is not mentioning that it should include tangible asset, it should include receivable. Rather, if we go to the definition and we reach the definition, I'll explain you that AAOIFI standards are principle based. Even IFRS are primarily principle based. So the definition of asset does not say that it includes this. Rather, it says that it includes whatever resources that you control that provide you an economic inflow of benefit. So considering that, we are very clear that right to use asset is, and per FAS 32 is part of assets definition as per FAS1. And just to clarify further, we understand that there were some Sharia issues. Some people had an argument about that maybe not acceptable with Sharia, but we believe, and we did reasonable research on that, and we discussed the Sharia committee of the Sharia board that reviews our accounting standards also, that usufruct or manfa'a is a mal from the definition of Sharia perspective. So it is transferable, it is an asset, and it is supposed to be a part of the assets, but we do not put a list of inclusive what is included or not. Rather, we put the principle based definition, and whatever meets that principle definition is asset. Do these changes take into consideration disclosure requirements for the choices made? This is a question from, I think, Sister Rashda and Apur. So disclosure requirements for the choices made. This question is not very clear about Sister Rashda, if I'm not mistaken, it's sister. The choices made for what? I'm not very clear on that. So if I request either you explain your question yourself by voice, or you can add that explanation to this question and answer tab. With that, Sister Farida and Sister Brother Rizwan, do we have any other questions? Anybody raising hands or anybody having a question in the chat window? Although we do not recommend, but some people may at times put some questions in the chat window. Do we have any question or comment here?
There are a couple of hands raised, so maybe.
Okay. Okay. Why I cannot see their hands raised? So if you can ask, please, Brother Rizwan.
Brother Nurul Kabir, do you have a question? Brother Abdul Karim Yahya, do you have a question? Brother Ibrahim Akhtan, do you have a question? I don't think so.
Okay. Okay, so for the question number, the second question, we just wait for further explanation after we can handle it later.
Okay.
Okay, so with that, let me move ahead. The objective of this standard the Islamic financial institutions are required to publish periodic financial statements to satisfy the common information needs of the users as described in the conceptual framework. The standard sets out the overall requirements of presentation of financial statement, the minimum requirements of the contents of the financial statements, and a recommended structure of financial statements that facilitate faithful presentation in line with Sharia principles and rules, and comparability with the institution's financial statements of previous periods and the financial statements of other institutions. So this is the objective. Then about the scope, I will not read out completely because I explained this issue already. One important thing is that this even applies to Takaful, Waqf institutions, Islamic collective investment schemes, and special purpose vehicles, etc., and even the virtual sukuk entity, etc. So part A, which applies to all type of institutions, is actually applicable to these all institutions, including SPVs and including virtual entities. The framework defines virtual entities, and we have our FAS 34 on financial reporting for sukuk holders, which talk about this virtual sukuk entity, and there are other virtual entities options also. Even on the Waqf standard, there is a concept of virtual Waqf institution. So we have kept this option open. And this standard provides the primary guidance, and mostly the most important definitions, etc., are coming from this standard. Now we have again a few comments on the questions here. Okay, let me take this.
Do you have a question?
Let me take the question first on the question and answer window, Brother Rizwan. Sister Rajda, I think she explained, like choice made for presentation for income, for example, if you said it can be also shown in comprehensive income. Okay, yes, we clearly allowed, like IFRS, we clearly allowed that you can have either a single comprehensive income statement, or you can have a statement of income and a statement of other comprehensive income separately. So this choice is there. Is there any special disclosures to FAS 30? Very good question. But most important FAS 30 disclosures are there in FAS 30. But some general disclosures with regard to Islamic finance transactions and structures are provided here. We'll go through it, and you can pose further questions at that stage. Are we having a question in through voice, Brother Rizwan, or there was some voice I could hear at that time?
No, I don't think so. We have.
Okay. Okay, so with that, we move to, as I mentioned, that part 2 of the standard is primarily on the Islamic banks and similar IFIs, means those IFIs who are in the characteristics of Islamic banks, that is they are mainly working as financial intermediaries. So for those institutions, this is standard part 2 will be applicable, while part 1 of the standard applies on all type of Islamic financial institutions. So as paragraph 7 says, this standard does not apply to structure and content of condensed or summarized financial statements. However, we have a working group on that, and this is under discussion, and I may request all of you to provide your comments if you feel that condensed financial statements should be separate, subject to a separate standard, because IFRS has a separate standard, and if we keep quiet, it means IFRS can be used. So are there any genuine value additions that we can do by setting up a standard on the condensed financial statements, or can we mention a few basic requirements here and we keep the rest with IFRS? So these options are there. You are not necessarily, you may not necessarily answer them here right now, but my request to all the senior learned professionals of the industry is that if they can let us know what they think about whether AAOIFI should have a separate standard or condensed financial statement which shall apply on the interim condensed financial reporting. So with that, I think again I can see a few questions. Is there intention that financial institutions will also include fintechs? A very good question, I think. In a nutshell, our standards are principle based, and we discuss this thing, and we are discussing this thing on the governance standard side as well. And we believe that there are different type of fintech. So one type of fintech is where there is fintech being used to perform the normal financial services. Like for example, there are digital banks. So a digital bank is a bank. The digital bank shall be subject to same governance requirements that AAOIFI has, and it shall be subject to same financial reporting standards that AAOIFI has. However, there is another type of fintechs. There are a lot of types, but I'm just giving you 2 examples. The second type of fintech is Islamic crowdfunding. Now, Islamic crowdfunding, we have started working on Islamic crowdfunding, and it is at an advanced stage on the governance side first. So we are developing a governance standard first, and we can decide with regard to that on the accounting side later. However, the standard is structured in a manner that be it a Islamic digital bank, be it a Islamic crowdfunding, be it a, again, cryptocurrency, we are not legitimizing immediately because cryptocurrency has Sharia issues as well. So I'm not mentioning consciously cryptocurrency. Cryptocurrency is not part of it right now, but all other fintech based institutions can apply part 1 of this standard. And they can apply the other standards like Murabaha, Ijara, others, Musharka, whatever standards are there with the or the Sukuk standard or the investment management standard. So wherever we have standards with regard to different type of investments or products, they can apply FAS1 Part A along with that. So this is a very good question. We have not decided to come up with a very clear separate standard. Maybe we will not come up with a separate standard, but we need to be clear, and we believe on one part we are clear that part 1 of this standard applies on even Islamic crowdfunding and all type of Islamic financial institutions. Then we need to decide whether, like, Takaful needs a separate standard, we all know. So we are developing it for Takaful, we develop for Sukuk, but there can be need for developing one for Islamic crowdfunding or others, so we can try to do that. But I believe that Islamic digital banks or any online services that are provided by Islamic banks, they all fall into this standard already. Then there is a question by Brother Muhammad Fayyad. What are the minimum level of explanation and clarification will be available in disclosures about investment account holders' profit calculation methodology, rate of profit distributed in each currency, and frequency of profit distribution? Brother, a very good question. Now, FAS 27 already is there, and FAS 27 already required these disclosures to a reasonable extent. So whatever is there in FAS 27, we do not need to necessarily repeat it in this standard. However, along with this standard, I forgot to mention that, and actually the time norm is not may not be sufficient. But with this standard, we have also developed a standard on. We have also developed the illustrative disclosures, illustrative financial statements, and Brother Harun and Sister Farida, please note it down. We should mention it in the key changes also, that our previous FAS1 had the detailed disclosure requirements in form of illustrative financial statements as a part of the standard, as appendix to the standard. This time the board considered this thing and decided that this practice has resulted in certain inconsistencies, because there can be new standards, a new standard coming in, but FAS1 not revised. So what happened, that some people had confusion with regard to application of the disclosure requirement in the new standard versus the illustrative financial statement that were provided and attached with the FAS1. So now this time it has been decided that we will be issuing the illustrative financial statement separately as technical release, not as a standard. So we are in advanced stage of developing, and actually we want to share it with you if time permits today. But the idea is that all these disclosures required by these, and even required by IFRS in the areas where AAOIFI FAS are silent, those all will be included in the illustrative financial statements, and those illustrative financial statements will be amended from time to time. So as I mentioned, these disclosures are required as per FAS 27. We need to make sure, and I just request Sister Marjan to take a note of it, that we need to make sure that in line with FAS 27, these are part of the illustrative financial statements in our enclosed document. If not, then we need to make sure and take it as a very important point. Thank you very much, Brother Fayyad.
Okay, sir. Noted.
Sister Rashida is asking, is technical releases will be available to us? For sure, technical release will be available shortly, but as of now, the technical release is an advanced stage of development. So we intend to circulate it as like exposure draft. We intend to conduct roundtables of it as well. But as of now, it is available to be shared on screen only, but it is not publicly available. But shortly, it will be publicly available. And for reference, surely, as soon as it is finalized, it will be available for reference, and it will be available in the time to come. We have a question from Brother Hakim Khalid. Hakim Khalid or Hakim Khalid. In the objective of the standard, it says financial statements should be comparable with other financial institutions. Do you mean conventional financial institutions? Again, Brother Hakim, very good, very important point. With this issue, we have very clearly mentioned in the framework. There is a section in our framework on the issue of comparability, and we said that comparability and uniformity are two different things. You cannot compare apples with oranges. Apples are to be compared with apples, and oranges are to be compared with oranges. And not only this, rather the distinction factors should also be there. So we believe that Islamic financial institutions have a different structure, they have a different business model, they have different risk profile of the transactions. So to a reasonable extent, we keep that distance and differentiation from the financial statements. And here, our meaning is not purely financial statements on the conventional side. However, there is a catch here. However, we try to still bring it closer. Why we wanted to bring it closer to a reasonable extent? Because as I mentioned in beginning, and I repeat it time to time, unless there is a value addition, we do not want to create a difference. So we want to create a difference where there is a genuine value addition, where there is a genuine risk profile that is requiring it. We do not want to just say it, oh, because we are Islamic, we want to do it different way. It's not only about banks, it is about all of other type of institutions as well. So we keep the difference with conventional where necessary, and with regard to conventional, we keep the differences, we keep the distinction, but at the same time we keep as close as possible. And you will see that our new FAS1, what contents are there for balance sheet and others, you will see statement of financial position and others, and the companies with income, etc., that have come closer to the conventional financial institutions, much closer to conventional financial institutions, except for the distinguishing factor, that is the type of investment return, type of income return, that is the treatment of urea, etc., and how the income has been allocated to urea. You will see all these things are different from conventional, because these are the areas where we have a genuine value addition by keeping that distinction. But yes, we brought closer to conventional, but we did not copy conventional. We kept necessary differences. Thank you very much, brother. I think it was a very good question. Now we move. I think these questions are done. Okay.
So just one more.
Question. Has there been any change revision to the minimum requirements for the content of financial statements? The general contents of the financial statement as a minimum are more or less the same. They are slightly improved. For example, FAS32 was new, and FAS32 allowed for the right of use asset. So the right of use asset or user-friendly asset has been added. This is just one example. So wherever there were new standards already issued by AAOIFI in the recent past, or where there was something important, those are the changes in the minimum content. Secondly, a second thing I've already mentioned about the primary statements, that there are multiple primary statements which are taken to the notes now, that is the Zakat, charity, and Qardhasan statements, while there is a new primary statement that has been added, and that is again, when we talk about comparability, that is again to distinguish Islamic financial institution from the conventional one, that is the income statement and the statement of income and return to the quasi-equity holders. This was not even required by the FAS27. This is all a new statement, but it is more like a presentation statement like cash flow. So we will discuss that when we reach there. I would like to highly appreciate today. I feel that it is a very good contribution, and we appreciate more and more questions. Some of our colleagues actually say that try to complete the standard, but I always say that my view is that we will try to complete the standard. It's very long standard. We can skip a few things which are not that much important, but it's more and more important to listen to our industry stakeholders and the expert members who are there. I think somebody has raised a hand. There is one question. Is there any provision for subsequent period transaction disclosures? The quick answer is yes. But detailed disclosures, we don't need to put all the requirements here because IFRS has detailed requirements which have, again, as I mentioned, that whatever IFRS is relevant and does not contravene Sharia, we follow that. So the quick answer is yes, it is correct. And there are minimum disclosure requirements here, but detailed disclosure requirements, since they are not specific to Sharia or not specific to characteristics of Islamic finance, so we allow IFRS to be followed for that purpose. We actually need to consider there is one hand raised. So do we want to, Brother Rizwan, do we want to allow that participant by voice?
Let me check. Brother Abdul Samad, would you like to ask a question? Okay. There's a question, I think, coming from our brother Dr. Abdurrahman Chetin. No, sorry, Brother Abdurrahman, do you have a question?
So there's a question in the Q&A. Just got it.
Okay, yeah, we just received. Okay, this is from Alio Fal. It seems that the form of financial statements has changed. For example, zakat, charity, and qard have been relegated to notes. I would not say exactly being relegated. They are transferred, but relegation gives a meaning that their importance is reduced. Actually, for all type of institutions, the relevance can be different. However, the board decided that these are not primary statements for financial reporting. So, but it is very clear that these are very important disclosures. So to that extent, it is there. But we need to understand the materiality and relevance to user. So while we transferred these three to the notes, with very specific minimum requirement that these must be disclosed. It is not taken to the illustratives only. It's taken to the relevant section in the financial account FAS1 itself. So it's very important. But if you see, the more relevance for banks and similar financial institutions is that of course the equity, that is the unrestricted investment accounts and sukuk and all that. And we made it a very clear requirement that needs to be disclosed very statement. So you can see that we have gone not by, we are not just saying that this is not that much important. We feel that in terms of materiality, what was more important has been brought as a primary statement. And in terms of materiality, qualitative materiality, these are important. So these are still kept as very important disclosures in the financial statements. We have another question, a very important question. Assalamu alaikum. Can a takaful insurance company adopt IFRS 17? We are undergoing a very comprehensive takaful revision project, takaful standards revision project. Presently, we have 4 standards on takaful. One of them is presentation and disclosure, and 3 are on the treatment. Our project has now reached to a very advanced stage where the exposure draft of the general presentation standard is issued, while the treatment standard, which will comprise of the requirements of other 3 earlier standards plus requirements of IFRS 17, is on a very advanced stage. We are actually we have actually developed the initial draft of the standard, and it will be taken to accounting board, I think, in our upcoming next meeting, that is in May or June, inshallah. So shortly you will see at IFRS 17 equivalent standard from AAOIFI. We believe that Islamic financial institutions, a takaful insurance company, Islamic insurance company, cannot adopt IFRS 17 as it is, because of the basic structural difference between the Islamic finance, Islamic insurance, and the conventional, that is the risk trade business versus risk sharing business. We believe most of the requirements of IFRS 17 can be applied with some changes, with some Sharia considerations and risk profile characteristics with regard to the participants' takaful fund, but not on the whole of the entity. So with that, I would, because this is not the subject of today, I do not want to discuss it further, but there are, I hope that shortly we will be conducting our public hearing on the first part of the first exposure draft of the Takaful project, that is the disclosure part, and there you can have these discussions and it will be very helpful for us. In the meanwhile, we request experts like you to provide your comments on the exposure draft, which is already available on the website. So you are welcome to attend the public hearing as soon as we conduct it, and to provide your comments there, as well as to provide your comments in writing. With that, there are more questions. Let me address them one by one. Let me go by this sequence. It seems that form has been changed. This one is done. I need a clarification. That is Shafi Abu Bakr Kurfi. The objective standard is silent. Sir, AAOIFI published the periodic financial statement on cash basis or accrual basis. Brothers, it's a question not of the financial accounting standard 1 primarily. It's question of the framework, and in the framework we are very clear that it is the accrual basis. Cash basis are not considered to be appropriate basis of accounting for us. Very rare situations are there where accrual may not be suitable, but we are having an accrual basis and fair value basis of accounting. But that is more appropriately addressed in detail in the framework, which is already finalized. That was the part 1 of this project. Next question, Brother Abdul Samad Ibrahim. Please, is there a formal collaboration between AAOIFI and IASB and ISAB? IASAB, I think we are talking about IAASB. So AAOIFI and IASB, International Accounting Standard Board, have a collaboration, which is, I would say, semi-formal. Semi-formal means that we do not have a contract to collaborate or MOU to collaborate, but we have a collaboration understanding where IASB, International Accounting Standard Board, has formed a consultative committee, and AAOIFI is a part of that consultative committee, and we attend their meetings time to time, and we provide them comments. And in several years back, we hosted one of their events as their outreach event, market outreach event, as a host. So there is some collaboration, but that collaboration is not a very formal. It's I would say it's a semi-formal sort of collaboration. With IAASB, we have contacted them for 1 or 2 things, and we have we have met and we have discussed that there is a need for collaboration. But the point is that on the auditing side, our standards are very limited, and we have a very clear strategy that on auditing we do not want to develop too many standards. Rather, we are just in a process of revising our existing standards and withdrawing some of the standards. So we don't feel that we need a very significant collaboration with IAASB, that is the Auditing and Assurance Standards Board. Do you mean the definition of cash and equivalent only current account, or it can be unrestricted account for 3 months? Sister, actually the issue was more about the Sharia, because what is considered cash and cash equivalent from Sharia perspective is different from what is considered as cash and cash equivalent from the accounting perspective. And there was another anomaly that some of our past standards like Murabah standards and even Salam and other standards, they mention about cash equivalent value of that transaction reporting. So this was a confusing part. So we tried to clarify that part, that this definition is primarily only for the purpose of cash flow statement and does not consider any other thing. And for the purpose of cash flow statement, we have brought it very close to what IFRS says. So we, again, as I mentioned, we excluded the Sharia part from here, and when the Sharia is not relevant, then we do not want to just reinvent the wheel and develop a new definition. So the answer to Brother Tayyib Raza is also the same, that amount due to banks in short term to be netted off. Again, it depends on because we kept the options related to cash flow, Brother Tayyib, that we kept the option related to cash flow. We provided the basic requirements, and the detailed requirements we left on the IFRS. What IFRS says is that they talk about the business model, that how actually you operate on the cash management. So cash flow reporting of some items in the operating income, operating versus financing activities or investing activities, or where to report the relevant income and expenses, where to report the changes. All these things, if you see IFRS IS7, they actually talk about your business management and your cash management approaches. So we actually If I'm not mistaken, we kept these things left over to the IFRS. If you feel that there is a specific issue we need to address in that aspect, which may have a Sharia or a risk characteristic element, please feel free to let me understand what further is needed. We have a point from Brother Sanjeev Agarwal. Is AOFI considering defer FAS 30 for takaful companies until AOFI equivalent FAS 70 is implemented? I think we issued a press release. Sister Farida, if you can provide the link to the press release that we issued with regard to this one, because the board took a decision. So if you can put that press release if you can put a summary of that press release in the chat box and provide even in this one you can provide a response, or you can in the chat box you can provide a response along with the link to that one. We have that clarification is there, but somebody actually mentioned to me that even that clarification might not be sufficient. So after seeing that clarification, Brother Sanjeev, if you feel that there is an issue in that clarification, then please feel free to write to us. We will try to enhance that clarification if needed. But Sister Farida, if you can do this one during today's session.
Yes.
We have a point from Brother Jeffrey Yusuf. Salam, this is Jeffrey Yusuf from Ghana. There is an AOFI standard for not-for-profit making Islamic organizations, considering the fact they are not purely commercial institutions. Brother Jeffrey, it is a very good question again. AOFI decides that Islamic social finance is part of Islamic financial institution, is part of the greater Islamic economic system. So AOFI needs to play its role in that. 3 years back, we commenced a very comprehensive project on the revision of Waqf being the most important of them. We started it first with Waqf, where we revised our Sharia standard on Waqf and developed accounting and governance standards on Waqf, which are finalized and published now. With regard to the not-for-profit entities, we mentioned that some of them can consider the Waqf standard to be relevant to them, but the Waqf standard is not always relevant to them. So we need to consider this thing that normal not-for-profit entities are not the primary scope of that. However, on the governance side, we have picked up another project which may take us on this side, on the accounting side as well. That project is that we are starting a governance standard project on governance, control, and audit of zakat institutions. So this is again a step towards the overall Islamic economic system, where AOFI believes that it has to play its role. And initially, as I mentioned, we are picking it up from the accounting side, from the governance side, and then we will see if there are after doing research and getting comments and all that, we will consider whether we need a separate one. With regard to Waqf, we believe that the conventional standards were not sufficient, and it was a need of the time, and we want to promote Waqf also as a part of Islamic social finance and sustainable development program. So we believe that Waqf was the need of the time. We developed it for not-for-profit. We believe partially you can use Waqf standard, and otherwise, unless we are convinced that there is a value addition that AOFI needs, and conventional not-for-profit standards like issued by the Canadian, by the Sri Lankan, by Pakistan, by British bodies, if they are not sufficient, then we can. So even IFRS for SMEs may be sufficient in some case. And similarly, there are IPSAS standards by IFAC also. So for normal not-for-profit entities, there are a lot of standards available. So maybe as of now, we are not fully convinced that normal not-for-profit entities of Islamic nature, which are not based on Waqf, need a separate standard from AOFI. Zakah in particular, being a Sharia issue, respectfully make the point that Zakah should be prominently displayed as part of primary statements, but also charity and qard. In practices, many users fail to refer to the notes at all, or not in conjunction with the primary statement themselves. Brother Aliu, this is a very important point. Let me ask other participants also, if they feel that if we should continue these as primary statements, we will take this point to the working group and to the board again. Let me clarify one thing. Every question that we receive and every comment that we receive is added for the comments for the board, which whatever is related to this standard. If we receive a question about FRS 17, maybe that may not be taken to this one, but all other questions that we receive, we always take them to the working group. Some of them I respond to them, but it does not mean that I'm just going to kill them. Actually, still these points will be taken to the working group. I just, as my responsibility as the secretary of the board, it's my responsibility to mention what board considered or what has been mentioned in other standards or other places. But it does not mean that we don't want to take your points to the working group and the board and we want to kill your points. Rather, we highly appreciate receiving all these points. So I suggest that this point related to zakah and the qard and charity being primary statements, we can still take. Qard, I don't agree with you, to be honest. This is my personal view again. They will take the comment, but zakah and charity can also be primary statements. It has been in the discussion in the board. Let's see what other participants say on this part, and we will ask the board to reconsider it.
Brother Umar, Aliyu had also raised hand. Maybe they won't speak.
Brother Aliyu, if you want to explain something in addition to this one by yourself, please, Brother Rizwan can allow you.
I guess no.
Okay.
Also, Abdul Samad, Ibrahim, would you like to ask something?
Assalamu alaikum.
Wa alaikum assalam. Brother, welcome.
Well, alhamdulillah, jazakumullahu khairan for the effort. Inshallah, it was the question that I already typed. That is what I wanted to ask. And inshallah, my question has been addressed. Jazakumullahu khairan.
Okay, brother, thank you very much. Now coming to Dr. Rafiquddin Riazuddin Qazi. The main question you are talking about the Sharia audit. AAOIFI has developed two standards, one on external Sharia audit and one on internal Sharia audit. And right now we are finalizing a very comprehensive handbook on external Sharia audit. It's roughly 400-page document which covers the detailed guidelines and the practice aids and the checklists and the work programs, etc., that are needed to perform the Sharia audit, primarily for banks, but the work programs are mainly for the banks, but the methodology and guidelines on all these things are for all type of Sharia audits. So we hope that we will be able to finalize. This is a very long document, very comprehensive document, so it's taking more time than expected to finalize. Hopefully, we will return back shortly. The question from Brother Abdul Karim Yahya is that, can a company with 100% equity of charity foundation pay zakah? Can a company with 100% equity of charity foundation, if the charity foundation here we are talking about charity foundation in the meaning of waqf, then I believe that waqf is exempt from zakah. But if this answer is not sufficient, brother, if you can further explain the question, then I will be more than happy to respond to it. With that,
there's a question on the, somebody has raised hand. Brother Ibrahim Akhtan, would you like to ask something? Maybe they did it by mistake.
No, thank you very much. Thank you very much. I don't have any question. Just I'm listening to you. Thank you very much.
Thank you, sir. Thank you. Okay, so with that, we move ahead. We just move ahead and we go to the definitions part. Again, as I mentioned, some of the things are finalized with the framework, so we do not want to discuss them. For sure, we'll take comments, but we will not go into much details. And some of the questions we have discussed, like this cash and cash equivalent thing primarily earlier, so I'm not going to discuss all of them. But what I do not discuss is, still, if you feel that in that section you have an important question, please feel free. So right now I'll go through the definitions, and all questions I will take after the definition section now. Asset is the definition in line with our framework. It is very close to IFRS, but there are some minor differences. But this is in line with with IFRS. The control definition has been discussed by AAOIFI framework and some other standards earlier. So the whatever is in control is considered to be an asset, and that's why we considered it's important to provide this explanation about asset include those attributable to quasi-equity, because those which are attributable to restricted investment accounts or wakala, etc., they are not considered to be assets because the control does not establish there. While on quasi-equity related assets, control is established, so this clarification was necessary. Then we have cash and cash equivalent. We clarified it. Control definition, I do not want to go in too much detail because it has been one thing, it is closer. The control definition we have brought significantly close to IFRS. This has been in some of our earlier standards like FAS 28, FAS 29, FAS 31, and we have clarified it with some explanations also, and then we have clarified and discussed it in our framework already. So here, unless we have a comment or something, we'll take the comments, but we do not want to discuss it. Then we have the definition of expense, include loss, historical cost. Ijara is a new definition coming from FAS 32, improved definition. Income is the new definition, and we actually have brought in one very important thing. People have talked about IFRS 15 revenue model. We say that normally we do not want a separate revenue standard because our standards are mainly based on product to product, but in the new standards we consider the 5-step model of revenue recognition by IFRS 15, and this we have made part of the framework as well as FAS1 also. With regard to Islamic financial institution definition, we have a comprehensive definition coming mainly from the governance standard, and it includes windows. And I would like to mention that Alhamdulillah, we in this week we had our accounting board meeting, a very productive meeting, Alhamdulillah, and we have in principle approval of a standard on the revised standard on FAS 18, revised FAS 18 on the Islamic finance windows or Islamic finance divisions. Istasna definition coming from our Istasna standard. Liability definition is different from the IFRS to the extent of quasi-equity. Means that we believe that quasi-equity, I have to discuss this thing in the quasi-equity definition. So let me take you through the quasi-equity definition first, because it has been discussed in the framework and some other standards, but it's very important to understand the overall structure of FAS1. So I would like to touch upon that. This is one of the fundamental differences between Islamic finance and conventional finance. In conventional finance, the deposits and most of the transactions are considered liability, even if they have some equity component. From our perspective, we believe that if the transaction structure that we have is primarily of profit and loss sharing nature, then that primary nature makes it like quasi-equity. So what are the characteristics of quasi-equity? Primary characteristics of equity, that is, in case of loss, unless negligence, misconduct, breach of contractual terms is proved, the institution is not liable to return the lost funds to the fund providers, and the fund providers share the residual interest in the underlying asset or of the business. Two, certain characteristics of a liability, that is, it has a maturity or a put option of redemption and liquidation. Brother Harun and sister Farida, if you can just note down, is it underlying assets of the business, or it is or underlying assets or the business? If you can just map it with the other standards, please. Okay. Okay. Certain characteristics of a liability, that it has a maturity or a put option of redemption and liquidation, which means that it has a maturity, or it has a fixed maturity date, or a person can who has deposited money with you can come and say, okay, I need my money back. According to IFRS, if there is a put option or a redemption or liquidation option, then in that situation, according to IFRS, it becomes a liability. But we believe that since the primary characteristic of equity is there in these Islamic finance transactions, and so we need a treatment different from a normal liability. And if we call it a liability, we believe that it will be against Sharia principles, because liabilities from Sharia perspective are those which are guaranteed, while this one cannot be guaranteed. Three is a certain specific features, that is, the right of the fund providers are limited only to the underlying assets or business. and not on the whole of the institution, as well as they do not have certain rights associated only with the owner's equity. Brother Harun and Sister Farida, you can note it down, because that's why I'm saying that this is our business here.
It is
And
our
in the
brother.
first one,
The first one is all.
supposed to be our business. You just need to
Yes.
recheck the typo.
Yes,
Maybe
it's
it's
a typo.
just a typo error. Okay.
Yeah, it's a typo. Yes. Okay.
Yeah. So, but we need to keep consistent between the standards, and I think it has to be. It is supposed to be our business. Okay. In a nutshell, this is one of the key changes, and that's why we keep our liability definition separate, and we say that we say it's a present obligation, legal or constructive, other than quasi equity. So we say that whatever falls in the definition of quasi equity is not a liability that's enforceable against the institution, etc. So other part of the liability definition is more or less similar to IFRS, but the main difference is here the quasi equity part. Secondly, a commitment is not considered a present obligation. Like, for example, if you have a promise, so promises are not a liability as per Sharia. So we do not recognize promises as a liability unless they are onerous. They turn into an onerous commitment or onerous contract, in which situation we create a provision against that. This is in line with FAS 28, FAS 30, FAS 31, and framework already has discussed it. But this is very important to understand that this concept of promise being different from contract. So we believe that if it has become onerous by virtue of the practice, or by virtue of what we call legal or constructive, and it has turned into a situation that you will end up paying money, then in that, or outflow of economic resources. So in that situation, there should be a provision against that. Other than that, promises are not liability. The Mudarba definition is as per Sharia standard, improved slightly. The old accounting standard and Sharia standard, that explanation is the one actually that explains it. Then we have Murabha definition as per new standard 28. We have Musharka definition. We have owner's equity. Again, owner's equity excludes the quasi-equity part, because in IFRS, it is only either equity or liability, but in our case, it's a quasi-equity as well. So both the liability and owner's equity definitions exclude quasi-equity. Then we have definitions for Salam. One important thing is that we have defined Sharia principles and rules. Sharia principles and rules were defined earlier in our governance standards, but now we have defined them in the accounting standards. Why we have defined them in the accounting standards? Because there is a hierarchy of adoption and selection and adoption and implementation of accounting policies, where we have to consider Sharia principles and rules, because if you follow IFRS or any other generally accepted accounting principles within the AAOIFI framework, you have to comply with Sharia principles and rules. So it cannot go, the treatment cannot go against Sharia principles and rules. So for that purpose, we were supposed to define Sharia principles and rules. AAOIFI now uses this definition of Sharia principles and rules across all of its accounting, auditing, ethics, and governance standards, which include this hierarchy of Sharia standards, country Sharia regulations, central Sharia board regulations, requirement of applicable FAS as far as it is related to Sharia. For example, timing of recognition of revenue or non-discounting of receivable, which is not allowed, and the approvals and rulings given by Sharia Supervisory Board. So these are some very important aspects, and we included this definition because the selection and adoption of accounting policies should be in consideration of the Sharia principles and rules. Then there is definition of SPV, which is coming from our Sukuk standard. There is definition of Sukuk coming from Sukuk and financial reporting for Sukuk holder standard. Zakah is a new standard, and we have issued the exposure draft of the Zakah standard. Inshallah, we'll be holding public hearings on this shortly, and we feel that Zakah standard will be issued shortly. But before that, we request again all of you to keep an eye on AAOIFI's activities and events. We will be shortly holding multiple public hearings on Zakah standard also, inshallah. So you are most welcome to provide comments in writing or to be part of the public hearings and provide your comments with that. So with that, we complete this section, and here then I would prefer to take more questions in written preferably, but also we can allow people to talk. So we have some questions. The first one, I think this audit related was answered. So this one was answered already. Then there is a question from brother Yunus Hua. Can Islamic banking use cryptocurrency? I mentioned this thing that cryptocurrency has Sharia issues, so we do not want to till the time first will be a decision by our Sharia board. Previously, we brought the question of cryptocurrencies in our conferences to start the dialogue on that. But generally, we believe as of now that cryptocurrencies do not have a Sharia legitimacy, means that we do not have a consensus on that. As of now, some scholars may have allowed cryptocurrencies, but still majority either is not allowing it or is not is silent about it. And it's not from AAOIFI's perspective, till the time AAOIFI Sharia board does not issue a standard on this, either creating a permissibility of that. Till that time, we consider it impermissible as a majority view. So we do not want to do any other standard on that part. We have a question from Taiba Bashir. As policy holder and premier donor, Tabarru, where Takaful company should refund the part of premium when I cancel policy, even though I'm donor to fund for repair for reparation of all fund members. A good question. I know that most of the, again, it's not the subject for today, but most of the Takaful companies, particularly those I have performed Sharia audit in my past experience, they actually put it as the refund of the tabarru. They put it refund of tabarru as a possible benefit to the insurance policy holders or Takaful participants. So in that situation, actually, we believe that. We believe that this refund is, again, it's not a primarily accounting issue, it's a Sharia issue, but it is acceptable not as a cancellation directly, but rather as a benefit. But again, it's a Sharia issue, and it has to be handled there, not as an accounting issue, and not that much into today's subject. Thus, the meaning and structure of put option will be same as conventional banks. Brother Muhammad Fayyad, I think it's a very good question. We did not define put option. Actually, we had a long debate in the board. We said that it is generally understood in the conventional banks and terms. So we do not want to put a definition for that. It's easily understood. But in order to clarify, we also said the maturity and the redemption and the liquidation. Maturity, redemption, and liquidation are coming from the Sharia perspective, while put option is the conventional term. We are just saying that put option is, from the conventional standpoint, put option is important because they want to classify everything that is having a put option to be a liability. While from our perspective, we are not putting it as a liability, we are just putting it as a quasi-equity. So the other words which are there, redemption, maturity, and from Sharia standpoint, we added the term liquidation, which was added by our Sharia committee, that from Sharia perspective, we should use the term liquidation. So we actually added that. So we, from Sharia perspective, are more concerned about these terms, while from accounting perspective, we just put it this one, and we did not want to go into too much detail for this one. And we feel that it's understood. Again, we will take your question to the board, and we'll see if the board and the working group feel that it's good to define it, and if it is necessary to define it. Otherwise, we will leave it, or maybe we can explain it in the basis of conclusion as well, that even if we don't write it in the body text of the standard, we can do it. We have a question in French, maybe. I'm very, very sorry, I don't understand French. We have some of the friends who understand French a bit. So if I can request some of those friends in our team who understand a bit of French to translate it. Then we have, I think Sharia is still neutral on cryptocurrency. Sharia is neutral, but AAOIFI has not given a legitimacy of that. So AAOIFI is not neutral as of now. Sharia, if you allow me, I'm not a Sharia scholar, but Sharia is still not neutral 100% on the paper currency. You can find a lot of scholars not even justifying the paper currency. And while paper currency is supported by the government and government reserves, while cryptocurrency is done something. So to be honest, To be honest, for me, till the time a consensus of all significant scholars and I would say the OIC Islamic Fiqh Academy and AAOIFI Sharia Board, till the time these type of bodies do not issue a very clear statement on the legitimacy of cryptocurrencies, I would suggest for AAOIFI, we take it as not approved as of now. But even for all our friends, I say that consider it impermissible till the time we have a consensus on its permissibility. If there is no consensus, if you can find some scholars saying that, it may be done. But saying that Sharia is neutral, Sharia is not neutral on that. It's a new thing, and it's a new thing. I would say that even the paper currency has gone through like 40-50 years of debate before being considered permissible by the majority or the consensus of scholars. So just a suggestion, a word of caution that please consider it Sharia not to be neutral on it till the time the important Sharia bodies like OIC Islamic Fiqh Academy and AAOIFI Sharia Board issue a very clear statement of its permissibility. We have brother Rahmatullah, what is the reason not to provide Sharia basis supporting documents related to any FAS? A good question. Actually, all our initial standard, AAOIFI started as an accounting body, accounting and auditing body. So all our initial standards had a section on the Sharia side as appendix that these are the Sharia rules, etc. Later, what happened that actually, technically speaking, from the perspective of the industry need, we started considering a need of Sharia board, and we established the Sharia board, and we started issuing the standards on the Sharia side. It was like 6-7 years later than the initial standards. Even after that, for some time, some of our accounting standards included the Sharia standards. However, now we have a very clear statement that accounting standards are accounting standards and Sharia standards are Sharia standards. If we write something in the accounting standard related to Sharia principles and rules, and later if the Sharia board changes or updates that rule, what will happen? There will be an inconsistency, and as of now, there are some inconsistencies in some of our standards that we have already identified. So after we decided on the new strategy in 2015-16, we were clear that we will be doing Sharia standards. We will be doing Sharia standards separately and accounting standards separately. And accounting standards have a very primary statement in the beginning that these standards shall be read in conjunction with the Sharia standards. All AAOIFI FAS shall be read in conjunction with the Sharia standard and in line with the AAOIFI conceptual framework of financial reporting. If there is a very specific Sharia standard related to that standard, we also make a specific reference to that standard. So this is clearly understood in the framework, in the FAS1, and in the initial box statement in all the standards that these are to be read with the Sharia standards. AAOIFI is one body. It is issuing complementing standards to each other, as Brother Rizwan very ably explained in the beginning. So we believe that Sharia rules are to be there. One last thing. There are still some of the issues which are Sharia, which need Sharia-based explanation. So we are doing two very important things there. One is that in the basis of conclusion of the standard, we provide that foundations of Sharia based on which we actually take a specific consideration on the accounting side. But this is where we have a very clear thing coming from the Sharia side, which we can explain in the basis of conclusion. The second thing is, if you go to our new framework, we have added a complete chapter, and that chapter identifies the Sharia rules which are translated into accounting. I remember one of our working group members, very learned, very experienced chartered accountant and a partner of one of the big four firms. He said, Umar, every time you guys take refuge over Sharia, that Sharia says it, so you want to have a different treatment. Whatever Sharia says should be written. Again, 100% what Sharia says cannot be written, but we try to do an exercise to collect all the important Sharia rules that impact the accounting treatments. Just for example, that two contracts cannot be combined in one contract. So that we apply it as a rule on the accounting side, as also that we do not combine two of the contracts. Similarly, there can be that receivable or payable cannot be discounted or sold against another receivable or payable or cash. So we make a clear rule that receivables and payables are not discounted. whatever are established receivables and payables are not discounted in our standards. So this is considered to be a Sharia requirement. So those things, whatever you are saying as Sharia basis for most of the important things are now contained at one place, that is our framework, where a complete chapter considers all these Sharia requirements which are relevant to the accounting of those general treatments as well as specific type of Islamic finance transactions. Secondly, with regard to the basis of conclusion of each standard, you go there and you can find a lot of treatments where we actually explain that why it is a specific treatment, because it was required by Sharia. But putting a appendix on the Sharia rules and principles applicable on that type of transaction is no more the policy of AAOIFI, and for that you need to refer to the relevant Sharia standard. Shall we, Brother Muhammad Fayaz has a question, shall we avoid using put option term? No, we don't feel that put option term has anything wrong. Put option means that the person who is the holder of the instrument comes and asks you to redeem or liquidate that. So we use this term to explain, and we use the term from Sharia perspective, that is maturity, liquidation and redemption also. Brother Aliyo Fal has a comment that these are highly speculative at this time. Actually, I don't want to go to the topic of cryptocurrencies. My question is very clear. My comment is very clear in just 2 lines. Number one, their core legitimacy depends on whether or on what thing they are based. That is the first and the most important question. The second, so if a country issues cryptocurrency again instead of paper currency, that might be subject to the paper currency rule. But if some independent body is issuing cryptocurrency against something new idea, that is not something which has a Sharia legitimacy or consensus right now. Number one. Number two, highly speculative means that Islam does not support the highly speculative businesses, and which may and particularly if the subject matter is something that cannot be justified completely. Hence, we need to consider it to avoid it. But again, I do not want to discuss further issues with regard to cryptocurrency from now onward. So if there are more comments, I will ignore those comments, because this is taking us away from today's subject. The next question is, will the Sharia standard of Ijara and Ijara Muntahi bi Tamlik be also revised after the issuance of FAS 32, or there is no need? The Sharia board has issued, has started two projects. One was possible revision of Ijara standard, that if there is any need to come up with a revision, they're considering it. And one of the aspects of Ijara, that is Ijara Mawsufa bi Zimma, was not considered, was not included primarily in the Ijara standard. So there is a standard in the pipeline with regard to Ijara Mawsufa bil Zimma that will be coming on Sharia side, but Sharia board right now is working hard on the Sukuk standard, and it will take some time. So we do not expect this Ijara Mawsufa bil Zimma standard to be coming on a priority basis. It may take some time. What should be, we have a question from Ms. Sunay Aniktar at Deloitte, Turkey. What should be the approach regarding quasi-equity in terms of Basel Accord? Sister, very important question. Actually, like AAOIFI, we have the regulatory Islamic finance body, that is Islamic Financial Services Board, which is we consider our sister body and our counter. We are working on some joint projects also. According to our mutual understanding, the regulatory standards are in the ambit of IFSB, and accounting, auditing, governance and ethics in AAOIFI. Governance has some overlapping part as well. So the governance part, we are trying to work together with IFSB, just to update you guys. So in a nutshell, what IFSB standards do, IFSB is the body of the regulators of Islamic finance, and what it does is that it works as a bridge between the Basel, IOSCO, and International Association of Insurance Supervisors and Capital Markets Association, and all these bodies. They work between as a bridge between them and Islamic finance industry. So what they do, they develop their standards on the regulatory side, including capital, solvency, risk, etc. And they develop those standards, and they bridge the difference between what Basel Accord or Basel Accord or other bodies say. Now, since although it's a regulatory matter, but this is very important to understand the structure of AOFI accounting standards, so I need to answer this question. So what happens, sister, that from our perspective, from the accounting perspective, we say that quasi-equity is not a liability. It means that we say that it should not be considered as a liability from the perspective of the regulatory even credit risk and other risk calculation and all these things. From the Sharia perspective, the quasi-equity takes the risk of the credit risk, market risk, equity investment risk, etc., of the underlying assets of that quasi-equity. So it means that if my balance sheet, 70% of my balance sheet comprises of the participatory investments or the unrestricted investment accounts, then it means that those 70% assets which are held by them, as a bank, I do not have the risk. I do not carry the direct risk of credit risk and market risk and equity investment risk, etc., for those assets. So if there is a loss on those assets, that loss is to be transferred to the equity holder, the quasi-equity holder, not to the bank. So ideally speaking, in that situation, the bank is not holding any risk on that, but the bank is holding the operational risk. Means that if there is a non-compliance, if there is a negligence, which may result in a situation that I end up in adjusting for capital and paying on behalf of this of the quasi-equity holders any losses, etc., because those losses have taken place because of my operational negligence. So the operational risk part is still with the bank, but the credit risk part, the marketing risk part, the equity investment risk part, they are not with the bank. However, there is also a common practice in the banks across the globe, Islamic banks across the globe, that in case the return on investments is less than the amount expected, or if there are some losses, at times what they do, that they give a hiba, or they reduce their mudarib share to compensate for those losses, which they do on a voluntary basis. So the IFSB standard, and we also we recognize and we appreciate that treatment. We are not regulatory standard setter, but we fully agree with that treatment. That is, the Islamic financial institution should not be required capital on these type of investments, except for the operational risk part. However, there is a factor called alpha factor, which is the probability that the Islamic bank will need to fill in the loss, or compensate the loss through hiba, or what we call profit smoothing techniques. IFSB has a guideline on that as well. So what we do, we say that you need to, still considering that hiba factor, you need to apply that alpha factor to the risk part of credit risk, market risk and equity investment risk of these underlying assets. So in a nutshell, and if the alpha factor is 100%, it means that the banks are taking a full risk of compensating all the losses. It has to be based on the market practices and Sharia practices in that jurisdiction. So if it is 1, it means that the Islamic and conventional will end up at a same point in terms of Basel Accord. However, if it is less than 1, for example, it's 0.5 or it's 0.3, it means that according to that market practices, the Islamic banks have an advantage on capital. Why I have gone through all this detail, because actually when we put the quasi-equity concept, we considered all these concepts to be very relevant and very important to understand from the risk perspective. And as I mentioned, that we justify our accounting treatments different from the conventional treatments, where we believe that either a Sharia requirement or the risk characteristics of the transaction or the balance actually are different from the conventional. So we come up with a different treatment. So I'm sorry, I might have taken too much detail on this one and might not be very much interesting topic for a lot of participants, but this was a very good question, and it has its own significance as to why we actually define quasi-equity separately. We have another very good question. That is, FAS30 is a very important standard. Is it possible for AOFI to compile case studies, etc.? Just my quick answer to that one is that when the board decided issuance of FAS30, there were certain aspects that board thought that there should be further details and there should be guidelines. So, but we said that let us listen to the market participants if they have more questions and more issues coming, then we will issue a technical release or guideline on that area. To be honest, we have not received as Secretariat till now too many issues with regard to FAS30. So if we receive more comments and more issues, we will highly appreciate if you can submit these things in writing to the Secretariat, then we can discuss with the board and we can decide on that. There is Sister Rajda has raised hand as well. Yes, please. Brother Rizwan, can you allow?
Yeah, sure.
Assalamualaikum warahmatullahi wabarakatuh.
Walaikum assalam.
Brother, my question was I specifically asked that question about the case studies because I'm just giving you an example. I had a client and their businesses were spread not just only in India, but across many jurisdictions of the globe, some of which were Islamic jurisdictions and some were not. Now, when we had to undergo a zakat task for the entire corporate group, it was a Herculean task because in a country like India, we don't have much, although we have a rich body of scholars. I ended up having to run around the country to meet different scholars to ensure that I can do things the right way and in line with Allah's Raza. Plus the fact that I took into consideration AAOIFI's guidelines and I had to study other jurisdictions, and it was a Herculean task. And it would have helped if I had some case studies to refer to in respect of the application. This is just an example in terms of zakat. I'm sure other people face different issues with respect to different aspects of accounting. So my reason for asking for the case studies is I'm sure it will be very helpful even to those jurisdictions that don't apply or even recognize AAOIFI, but where like India, which has the second largest Muslim population, here business entities and others also are very keen on ensuring that that everything is done in the Sharia compliant manner, irrespective of the fact that the country doesn't take it into consideration. Jazakallahu khairan.
No, thank you very much. Thank you very much. Highly appreciated. And as I mentioned, that the board said that we will consider guidelines if there is a need. Now you are raising a need, then we request you to kindly help us further in putting some questions with regard to whom the guidelines are needed. Write it down to us. You can write to accounting@aofi.com, and you can write directly to me at oansari@aofi.com, and we will try to initiate a project on that. But first, we need to take a board approval on this one. But it's as I mentioned, the board already said that we might need guidelines, but let's listen to the market whether they need. Now you are saying it. Let's take it to the board again. Thank you very much. And then there is another question. We need the issue of product standardization to be solved in all the IFIs. It's brother or sister because it's anonymous. So the quick answer is our Sharia standards are trying to serve that purpose. We are open to address more and more issues on that part, but actually our Sharia standards are there. Again, a very important question about hyperinflation. We have discussed the issue of hyperinflation in the board, and particularly when we were developing the standard on this FAS1, we considered that hyperinflation issue as well, what Sharia issues can be there. And then there are we have a standard of translation, foreign exchange translation, which we intend to withdraw, except for the consolidation part, which will be either withdrawn or not till the time we decide on the consolidation standard whether we want it separate or not. Hopefully we will be wanting it separate, but the translation part of our normal translation part is taken away because there is no Sharia issue in normal currency translation of accounting. However, there is issue with regard to what we have put in the translation, which is the treatment is slightly different from conventional. So we actually have to address it with the consolidation part. So we kept it saved for now. With regard to hyperinflation, we considered it and we believe that hyperinflation has its own issues. Hyperinflation accounting, we believe that hyperinflation accounting is acceptable as per Sharia. The board discussed it again. We tried to touch upon this thing, and it was a decision of the board that we will try to touch upon, but we do not want to have a very we do not want to have a very comprehensive standard on that part. We do not want to have a full standard on hyperinflation. Rather, we believe that the hyperinflation standard apparently is not against Sharia if all the Sharia related computation are done on the historical data. Means that, for example, when you talk about the profit and loss distribution of the investment account holders, if it is done on the basis of the original values of currency that were there, so in that situation, only our reporting of that adjusted for hyperinflation with the appropriate disclosure does not make it non-compliant with Sharia. However, if somebody does that they adjust the values and then they adjust the amounts that are allocated to investment account holders, that may be an issue for Sharia. But again, Sharia has a standard on translation of currencies. So we believe the translation of its currency standard that is mainly about the transaction and treatments, but this is also the basis for the for the recording of transactions. So we actually believe that hyperinflation may not be needing a full standard. We just need to, like, maybe if needed, we will touch upon. So for that, we will request you that if you can kindly identify the key issues if you are feeling it, because you can raise the main questions and then we will consider with the board, we'll take them to the board and we'll consider whether we need to amend them significantly or we need to like address them in a significant manner. Either in this standard, we can address them in this standard briefly, or we can issue a separate standard. This is kept to the board. So I request all of you, particularly those from the audit firms and particularly those from the countries like Turkey and Sudan and Syria and others, where the hyperinflationary situation has been there. It's not continuing in all the countries all the time, but these are the countries that we identified had a risk of hyperinflationary economy adjustment needed there. So those particularly from these countries, if they can kindly provide us some important issues that they feel in application of hyperinflationary accounting to Islamic finance, then we will be able to address them. We considered some of the issues, but at that time the board felt that we do not need that much detail on that, because if the actual transaction recording and then its distribution of profit, etc., are done according to the original data, this reporting on an adjusted basis doesn't make it a Sharia issue. I know it's a very complicated issue again, and it's relevant for this standard because we need to decide here whether we want to have it touch upon in this standard, whether we want to put in as a separate standard, or whether we want to like put it in guidelines, etc. So we will be highly appreciating receiving the exact issues that need to be addressed. There is a quick comment about Pakistan. Pakistan does not follow our standards completely. In Pakistan, standards, local standards are also developed, and the central bank regulations are also there. But the regulations say that they consider our standard. They are preferred to, or they are encouraged to, not preferred. They are encouraged to apply AAOIFI standards. So some of the accounting treatments in Pakistan are in line with AAOIFI, but the general disclosure and overall applicability of AAOIFI FAS is not there. With that, I think we have completed this one. And to be honest, I don't know about you guys. Wallah, I am enjoying it a lot. It's a very good discussion, very good questions coming in, very active participation. I highly appreciate that. But my only worry now is that it's a long standard. So with that, we need to move on. And when we complete the next section, we will just stop again for taking the questions again. This is the section about confirmation of compliance with AAOIFI FAS. So if you don't follow AAOIFI FAS in its entirety, you cannot say that you follow AAOIFI FAS. And now it includes that in absence of a very clear AAOIFI FAS on a manner, still you cannot go to IFRS directly. You can apply IFRS for property, plant and equipment. You can apply IFRS for inventory. You can apply IFRS for foreign exchange translation. For any matter where we do not have a separate standard, or where we withdraw our standard because of that reason, that we do not want to compete with IFRS. But if it is about an Islamic finance transaction, you first need to see I will let me take you to the to that point. We'll discuss that point. Like, let me quickly mention that first you need to see the relevant AOFI standard, then you need to see any similar AOFI standard, then you need to see the framework, and you can decide the accounting policy in line with the framework coming from IFRS or some other place, but it has to comply with the framework and Sharia rules. And then you can accept a management judgment. Management may adopt a policy of their choice, which is suited to that type of transaction, subject to the condition that subject to the condition that is in line with the framework, not contradicting the framework. Now, coming to the elements of financial statements, we talked about some of the definitions already. Some part is reproduced here about assets, liability, quasi-equity, because these parts were here, but then they were like taken to additionally to the definition also. There is explanation also for owner's equity here. This explanation is with regard to the tier 1 sukuk, particularly that if you have an instrument, either it's sukuk or other type of participatory arrangement where there is a perpetuity or convertibility option and there is no put option, that then is still reconsidered. It can still be considered as equity. This is in line with IFRS, and this is in line with most of the regulatory requirements for the purpose of tier 1 capital. This has been discussed in our earlier standard FAS 29 as well, but FAS 29 has been issued as exposure draft and not yet finalized. So, but it has been discussed. So AOFI has given its view, and some of the basis of conclusion are already provided in FAS 29, which is not yet final, but we are waiting Sharia approval for that. Then with regard to the income, this is the definition of income, what income is, and what are the 5-step models. If you see, the 5-step model is closer to IFRS with regard to the performance obligation, etc. The primary difference I would say here that the framework we have discussed the issue of substance over form versus uniformity of substance and form. And while IFRS goes for substance over form, while as a new term is like faithful presentation, in which they believe that substance over form is part of the faithful representation, while we still believe on faithful representation, but our concept is different, that substance and form have to be together. I normally say, and we have written this thing actually now in our framework as well, I repeat that that in Islamic finance, it's not about a bunch of documents that you can make just to nauzubillah make fool of Allah subhanahu wa ta'ala and of the public at large. Actually, whenever you do a transaction structure which is different from conventional, so it's not only about the contract, it's also about the transaction, execution, implementation, and reporting. So this 5-step model is very important because we believe that most of our transactions are not financial instruments. They may result in a financial instrument coming as a net receivable or net payable, but generally speaking, they are transactions. So this 5-step model is very important because even if we do not have a standard, you need to determine the performance obligation, which will be generally a service contract or a sale contract, and you need to determine accounting according to that. And we believe that we do not have any difference opinion with IFRS on this 5-step model. It is as it is more or less as per IFRS, but the way you interpret a transaction is different. We interpret our transactions not as financial instrument, but as sales, service, and entrepreneurship transactions, while IFRS at times consider them a financial instrument or a liability or a receivable. So this is the difference, but this is very important step that we brought our standard closer to IFRS here, and we brought the 5-step model, which was not earlier there in our standards. And there are further explanation with regard to the income recognition or conditions that are there. Then this is about the expenses. Then we come to the complete set of financial statements. I'll take comments after this one, because this one and the last one are very much interrelated. So the primary set of financial statements we say include the financial position statement, that is the balance sheet, the statement of income and other comprehensive income. We discussed it, that either as a single statement or as 2 different statements. Then we have a statement of income and attribution related to quasi-equity. This is a presentation statement like cash flow. So the balance sheet and income statement and the statement of changes in equity and the other comprehensive income statement, these are the statements for the accountants. They need to understand that these are the statements from where they have to route their accounting. However, like cash flow is not, accounting is not routed through the cash flow. Cash flow statement is actually a presentation of a statement of what has happened and recorded. Similarly, this statement of income and attribution related to quasi-equity for financial reporting period is also a statement which is like which is in the nature of presentation statement. So you will not route all the accounting entries from it. Accounting entries will be routed in general books of account, and they will be routed through the income statement. But out of the income statement and out of the other comprehensive income statement, whatever is attributable and attributed to the quasi equity shall be respectively disclosed in this statement, presented in this statement. Then we have a statement of change in off balance sheet, so a statement of change in equity, which will be changed now because the comprehensive income part will go to the comprehensive income. A statement of cash flows is there. A statement of change in off balance sheet assets under management. The new term is off balance sheet assets under management, while the previous term was restricted investment accounts. So we off balance sheet accounts or restricted investment accounts. So instead of, because there can be more types of instruments now, there can be off balance sheet sukuk, there can be off balance sheet restricted investment accounts, there can be off balance sheet wakala. So we changed the name and we brought all of them together in this one. This was an inconsistency between old FAS1 and the and some of the standards that were issued in between, like FAS 27 and FAS 31, etc. So now we have brought it in line, and even the framework has got this new one, and framework, as I mentioned, is already finalized. Then we have talked about the sources and application of zakah and charity. We would like to know more and more people from more and more people whether they want to have them continue as a primary statement. We receive one comment. We will take it to the board again, and we can consider to keep the zakah and charity statement. To be honest, Qard fund statement still will not be primary. I still believe, and it's my humble view, but again, if you guys feel that Qard fund statement should be primary, then you can write down to us. You can put your comments in the chat box for whether you feel that it should be these should be primary statement, or these should be taken to the notes. But this is an important issue where we need your input. Then institutions requiring special considerations such as Taqaful, Waqf, collective investment schemes, etc. They may make some changes to these primary statements. So their primary statements will be according to their respective FAS, but generally speaking, the definition of asset, liability, quasi-equity, off-balance sheet managed accounts, all these things will generally be applicable to all type of institutions. However, the specific standard, there is a general principle, you understand, that specific overrules the general. So wherever we have a specific requirements, we will consider those specific requirements, and we will that will override the general requirements of this this section of the standard. True and fair presentation. I just touched upon this thing that that it has to be a true and fair presentation, and we have discussed about this issue more in the framework. So I do not want to go into that much detail, and if there are any departures, etc., those need to be disclosed. Accounting policies and estimates, we have defined estimates. I think the estimates were not defined earlier, but accounting policies we have defined better, and this is closer. The new definition is closer to IFRS. Also, the estimate definition is closer to IFRS. And we have very clear that if an accounting policy will not be considered shall be considered inappropriate if it's not in accordance with the AAOIFI FAS, a departure from Sharia principles and rules, and not reflective of economic nature of the transaction. And again, economic nature of the transaction should be read in the context of AAOIFI framework, where we do not believe in substance over form, and we believe in uniformity of substance and form. With regard to the accounting policies, we have provided guidance that what need to be done for the purpose of selecting the accounting policies and significant accounting policies. What are these significant accounting policies and what need to be disclosed? This can be disclosed at one place. Similarly, we have a section now on change in accounting policy and correction of error, etc. And this is more or less in line with IFRS, but IFRS has a full standard on that, and we have a very brief, limited requirement, summary requirements here. Treatment of change in accounting policies and estimate. Change in estimate is also addressed here, and correction of an error in prior period financial statements is also discussed here. Disclosure requirements for the accounting policies and estimate changes, we have put in those requirements here. And with regard to errors and with regard to change in estimate, whatever are the effects and how it has been affected and how it is corrected. disclosure requirements for this one is continuing here. Again, all of this, as we have limited time today, so I'm skipping some of them, but I will take comments from you now. Once we complete this section, I will take comments from you. Or maybe as soon as we complete this one, we will take comments. Now, accounting policies, we have talked about one very important aspect here, that what are the contractual requirements and Sharia approval with regard to that. We need to give a very specific consideration to that. And because if there is a change in accounting policy, or there is a prior period error that is corrected, there are some investment account holders or the other type of quasi-equity to whom you may have made payments. So it needs to be determined. Each one of these correction and adjustment need to be determined whether we need to go and correct in the treatment with regard to the past period investment account holders or not, because normally it is a constructive liquidation. So in what situation still a correction might be needed for them, and what situation it might not be. It will be dependent on what the contractual arrangements we have with those quasi-equity holders, and in accordance with what the Sharia Supervisory Board and the AAOIFI Sharia standard is saying in that specific respect. Other than that, like general treatment will remain the same, but this is a very specific consideration with regard to quasi-equity and other type of investment account holders, and even the off-balance sheet assets under management, as to whether if there was constructive liquidation done in those periods, to what extent we are going to adjust that. With that, we have completed two sections. One was for the primary statement, and one was mainly for these requirements in the with regard to the accounting policies, etc., and general presentation things. So, let's take comments that we received till this stage. It's 3:23 Bahrain and Turkey time. We still have 35-37 minutes. I do not want to, as I said myself, that I love today's discussion. Very fruitful, very good comments we are receiving. But we need to be cognizant of the time as well. So I'm trying to be a bit quicker now, and we are willing to take the comments. I will still stop at the important things. Definition of asset is now almost the same as that per IFRS. Should we not have our own definition in the light of Sharia? Brother Rahmatullah, our definition now is not exactly IFRS, but it is close to IFRS. The only difference is when it says the resources controlled. When you go for the control definition, the control definition is also brought closer to IFRS. But the way we explain control is different. So still we have differences. There might be a few things which are considered off balance sheet for us, which may be considered as an asset under the IFRS. So the definition, when you go into depth of the definition, and when you go to the depth of control and explanation with regard to control, there are differences, and those differences are there in order to ensure Sharia compliance. But as I mentioned again and again, I would mention, every time having a different definition, every time having a different treatment, just for the sake of saying, okay, I want to be different, I want to show myself different, it might not be the best idea. Okay, this is about disclosure of C-suite salary of Islamic banking. I think we mentioned about the related party transactions already. So whatever is considered to be related party, which includes the key executives. So the disclosures, but not about each one of them, but as collective, what are the transactions with related parties, etc., in line with IFRS and whatever is required by AAOIFI, we have put in. However, if you want to add additional disclosures to that, we welcome any specific comments. You can write it down to us what specific comments you like. But related party and related party related disclosures which are in IFRS are already part of our requirement. How many standards on disclosure did AAOIFI issue, and when a regulatory authority issued, when a regulatory standard stated that all AAOIFI standards on disclosure shall be complied with, does that mean all AAOIFI standards that bear the word disclosure? Now, this is something that we need to talk to we need to take up with the regulatory authority, because every AAOIFI standard has disclosures. So some standards are primarily on presentation and disclosure, like this standard, but there are some standards, like for example, you go to Murabha standard, you will find three main treatments. You will have the basics about Murabha and everything, but then you will have three main treatments: recognition and measurement, initial recognition, subsequent measurement, and presentation and disclosure. All of our standards have this presentation and disclosure part. So it does not mean that only the name of disclosure must be there. Actually, all AOFI financial accounting standards, I don't think there might be any single standard that does not have the presentation and disclosure section. So in my view, all AOFI standards have disclosure requirements, so they become applicable if the regulatory authority says that. But our suggestion to the regulatory authority, they should say that AOFI financial accounting standards shall be applied. That's my suggestion for correctly wording the adoption statement. However, even if it is written that standards on disclosure shall be complied, all about AOFI standards are part of it. With regard to CSR, brother, this is actually a governance issue. We are working on sustainable development and sustainability reporting on the governance side. This is a new project that has been initiated in, but if you see, we have a very good standard already on the CSR, corporate social responsibility. We have our governance standard number 7, which covers very good in a very good manner the corporate social responsibility. However, on the sustainable finance and on the social development goals, etc., we are working in additional standards which are going to enhance on that. But governance standard number 7, you can always refer. This is one of the very good standards with regard to Islamic finance. You will see that it has a very clear focus on the corporate social responsibility, including the aspects which are considered minimum from Sharia perspective and the concepts which are considered additional from Sharia perspective. So this is the function of the governance board, not the financial accounting board. So we are not putting it here. We have discussed about CSR reporting as well. So if you feel that CSR reporting is necessary, again, the CSR standard has disclosure requirements also, but it's about CSR audit also. If you want that sustainability audit also, in that situation, maybe we can consider an audit part, reporting and audit part. Otherwise, the CSR standard GS7 includes the behavior as well as disclosure both. Do we have anybody who want to speak? Anybody raised his hand, brother Rizwan?
No, bro.
Okay. So with that, we continue on the next section. General presentation for all institutions. So there are some general presentation requirements for all institutions. So first and the foremost is that disclose all material information that is necessary to make those financial statements adequate, relevant, and reliable. Financial statements shall disclose. These are some general disclosure requirements that is about the institution, etc. Then about the subsidiaries, about the activities, about the holding company, etc. A role of the Sharia Supervisory Board, etc. Brother Harun and Sister Farida, if you can just note it down. In the last meeting of working group, we considered about talking about the whole of the governance framework rather than only the Sharia board. So I think that we need to keep consistency on this one between the two standards. Okay. Then we have the significant notes about these things are to be part of it, and these are some very basic requirements. And then there is a requirement about zakah. And again, this standard is to be read with the disclosure requirements which are contained in different standards. So the primary ones are brought in here, but others are actually contained in their respective standards. Now coming to this disclosure and so of sources and application of zakah, we have taken this comment already that some of our parchments consider it to be part of the primary statements. The disclosures of further disclosures and detailed disclosures about this will be finalized with the zakah standard. And the zakah standard, as I mentioned, we have already issued the exposure draft and we are waiting for written comments, as well as shortly we'll be considering holding public hearings on that. This is about the charity. Again, same issue. We will take a note of it. Qard fund, we have taken a note of the comment unless we receive additional comments. This is about the currency, and it's about how the currency is to be translated normally. Sister Farida, if you can correct me, the board asked us to write a note on the hyperinflationary, and they said that we will consider adding it as an appendix to the standard. What was the conclusion on that one? Because we have received.
Yes, that one we took it to the Sharia committee. We had a meeting with the Sharia committee, and they didn't. They said that it's not conclusive. They cannot conclude, give their approval on what we presented to them, the paper that we presented to them.
Okay, so it is not. We need to like present to them again.
Yes, if we can update it again, yes.
Okay, so it means that just because we receive a comment today also, so we need to consider, but my suggestion, we take it as separate. We either as guideline or as a standard. We do not keep this standard pending on that. I just wanted this update.
I'll note it down. I'll note it.
So, but so we take it comment that we need. We don't take it, that comment for this standard. We take that comment that we received from our honorable member today for the guidelines or hyperinflationary economy separately. Okay.
Yes, sure.
Then the segment reporting, as I mentioned, we have a separate reporting segment reporting standard. We have a translation standard. We want to withdraw those standards. We want to put the minimum requirements here and relieving the detailed options on the IFRS. So we have put in some of these requirements, and then we leave the remaining things to IFRS. Brother Harun, if you can just, Sister Farida, just if you can make a note of it. I think it was in our last public hearing also that that this 10% thing need to be mapped with IFRS also.
Okay, I'll note it down.
Okay. With that, Sharia non-compliant transactions, we have asked specific disclosure for Sharia non-compliant transactions and the way these are handled and what are the conclusions, and if these are to be paid in charity or to be reversed, what are the decision of the Sharia board, etc. So this section deals about those requirements. Then we have about classification of assets. Compensating balances, that if there are compensating balances, these need to be not netted off, rather they need to be disclosed properly. Even if they are netted off, these need to be disclosed properly. Then this is requirement about contingencies and commitments. Subsequent events, we received a question about the subsequent events, any transactions taking place after any adjustments coming after the balance sheet date. So subsequent events, the minimum requirements we are putting in this standard, that particularly with regard to distinction between the adjusting events and the non-adjusting events, while we leave further details on the IFRS because it does not have a Sharia issue. But if you see, one very important aspect about it is about impact on if you see the impact in paragraph 93, if you see impact on the owner's equity and the quasi-equity, that we have addressed properly. So whatever is related to quasi-equity will go to quasi-equity, and treatment will be in line with the Sharia supervisory board for that. Restricted on encumbered assets, if there are any, they need to be disclosed and properly presented. I feel all of you might be feeling that I'm running very fast now, but I want to address at least the most important of the aspects, and then we are available even after the end time of the meeting. But in the benefit of time for everybody, we need to try to complete maximum part of it today, and then we can still take comments after that if people want to continue.
Brother Umar, there's Sister Rashta who wants to speak, I think.
I will take comments on completion of this. I will take comments after completion of this section, please. Okay, we'll take all comments, written and spoken, but once I complete the section. On the related party transaction, again, we have put in the minimum requirements. We have decided we do not want to have a separate standard. We received a comment with regard to the C-suite disclosures of salaries and other benefits, etc. So that has to be done, and we'll just take a note of it, and we'll consider if we need to put it very specifically. But I think we talked about some of the important aspects from the related party perspective, and remaining we have left on the hand of IFRS, so we leave it on that. But again, if you feel any important, very important consideration is there, which you need to put in from the perspective of Sharia or from the perspective of very specific nature of Islamic financial institutions, we will be more than happy to take that. Next section is about going concern. Again, this is one of the areas which we are not going into much detail, but rather we are leaving it to the it's a conceptual issue. Partially we have discussed it in the framework also, but since it has some implication on the treatment of accounting treatments, particularly with regard to constructive liquidation and respective rights and responsibilities. So we have put in some minimum requirements with regard to going concern here. Corresponding figures, it's a more or less similar requirement which was there in the last standard and more or less similar to IFRS. We have asked for if the accounting policy is retrospectively applied, then we need to give treatments. And a third statement of financial position. In the beginning, if you see, if you remember, I mentioned that this is one of the changes, that a third statement of financial position is required in line with IFRS, which was not a requirement in AAOIFI. With that, I believe we stop here, because here we complete the requirement for all like all institutions, the general requirements. Then we have presentation and disclosure also. But here we can take the comments which we receive in writing. So first the comments in writing, and then we will go for the comments on if somebody wants to speak. So the first one is, I like the control component and asset definition, but I still think there should be included an extension clause, ability to exclude others, for example, etc. Because one can have control, but not the ability to exclude others accessing the said assets. And in the situation, we may be looking at an immediate impairment to the asset owned. A good comment, but I think partially this comment is addressed through encumbered assets. We mentioned about encumbered assets also, and we mentioned about the quasi-equity also. And whatever the quasi-equity assets are in our control, because quasi-equity holders cannot directly access that, but the non-controlled assets will go to the off-balance sheet statement of off-balance sheet assets and liabilities. So in that situation, if you see that whatever is directly accessible by others, we believe that either it is addressed as a disclosure in encumbered assets or as a separately excluded in the management in the off-balance sheet managed accounts. Again, brother, this is a very good point. I do not want to just kill your point. I'm just mentioning what my view is based on the discussions at the board. But this is a very important point. Let's take it to the board and see how we can address it. Sister Rajda, in reference to points 56 to 63 requirement for separate disclosure for sources of zakah and qard are addressed, can we have access to the reasons for these requirements for improvement for our knowledge, like the why behind the provision? I'm not very clear whether you want your comment is about taking them from primary statement to the notes, or your comment is with regard means that you are asking why we did it. So the answer is that that the accounting board felt that we are having too many primary statements, and primary statements should be based on the main user's requirements, not considering all the notes. All the notes are not necessary, and the zakah and charity statements are important, very important disclosures, but are not the primary disclosures. That is the why for moving them there. So I think it's partially answers your why on the other question part as well, that why we need those disclosures, because these have a specific significance. And even if their amounts are not very material financially in quantitative terms, they still are material from the qualitative terms. Is there a consistency between this standard and the standard presented from IFSB? Brother Ilyas, I think we do not have any inconsistency, but we are addressing two different issues. They are addressing the regulatory treatment, and we are addressing the accounting treatment. And we are not creating an accounting treatment which is going against their regulatory treatment. So while both of them are not having a consistency, like we do not have that alpha factor in our standard, but the overall concept or the conceptual framework behind their treatment and conceptual framework behind our treatment is more or less the same. Brother Brother Ahmed Mustafa of Ibdar, welcome brother. I think related party is important aspect of terms of legal requirement by law in Bahrain and other countries. I think having a separate standard is worth considering by the board. Thanks. Brother Ahmed, we can address it in three different approaches. We take your comment to the board and we'll ask the board to answer your question in either of the three. One is we add a standard. Number two, we add guidelines. We do not ever add a standard, rather we add guidelines. Number three, we add a specific section which we have already, but we enhance it further in the illustrative financial statement. So the answer to your question is yes, related party is a very important aspect, not only Bahrain, all over the world, and even from Sharia perspective, it is very important to ensure conflict of interest is not there. So these transactions are very important, particularly because a lot of different stakeholders are involved. So the disclosure is a must. We must have this disclosure requirement, but either as a fully standard or as guidelines or as illustrative disclosures, this will be the decision of the board. But we don't have a disagreement with you on the need of it. Only disagreement can be there on how to approach it. There is a comment, must understanding standard doing practical example. The closest practical example will be the illustrative financial statements, which will provide the whole set of financial statements on an illustrative basis. So inshallah, we will be, we don't have time for that, but I think we will be making it available in future. I can show, as soon as we complete this presentation, I can just show you a glimpse of that illustrative financial statements as well. Sister Rashida, you wanted to say something? Your hand was raised also.
Yes, Brother Omar, may I?
Yeah, please.
So my question was in reference to, like, when I asked behind the why behind the provision is because, like, for example, just one simple example, while dealing with the client, they were commingling all the funds with respect to Lillah and Zakah and other Qard funds, and the scholar advised me that it should not be done that way, it has to be done separately, and he gave the reasoning behind it. Now what happens is, when I'm addressing an issue with respect to the client, you have to always have the reasoning also for it, as far as possible, to avoid ambiguity. Now, in this respect, since the disclosures mention that the sources and the application of the charity funds or Zakah funds or the Qard fund should also be mentioned in the disclosure, ideally it would be nice if I would be able to provide the reasoning also behind. Now, when provisions are developed by AAOIFI, all these standards, there are a set of discussions that happen in the background that lead individuals to finally come up with a set of standards and provisions. So is there some kind of an archive or some kind of a resource that can be accessed where we can understand, like, what are the discussions that went behind it and why was a particular provision adopted, or is that not something we can get access to? Just for our knowledge and understanding, because we want to grow in the end.
I'm not sure whether you have gone through till the end of the standard or not, because all our standards have detailed basis of conclusion, very detailed. At times they address all these things, but again, something that you consider relevant might not be considered relevant enough by the board. So maybe we as board, or maybe the team working on the standard, may not consider the importance of that point for you. But normally for all the important points, we have quite detailed basis of conclusion. At times the basis of conclusion are now taking the size of the standard itself. So the basis of conclusion are there. I do not recall by heart right now that whether this issue has been addressed, but for sure we will take your point to the board. And let me tell you one more thing, that on the exposure draft, there are some basis of conclusion, but these basis of conclusion are updated with regard to each significant point that we receive in the public hearings. We put a basis of conclusion mentioning that if the board agrees with the point, then we mention that because we received a comment in the public hearings or on the exposure draft in writing, we reconsidered this point and we made a change to the exposure draft in the final standard, or vice versa. If we feel that a point was important, but still the board did not agree with that point, then still we disclose that. So most of the important points that we are discussing today, most of the ones which have a significant impact, will be covered in the basis of conclusion. If not now, then in the final version, inshallah. However, this part of disclosure, our issue was not that disclosure, why disclosure is necessary. Our point was that to what extent it should be given, like should it be primary statement. There was one more issue that our earlier standard had charity and zakah statement in one main statement, although in different columns. But now we have made these completely different statements. That is also one of the things, because we felt that zakah is not applicable on all, but charity is applicable on nearly all Islamic financial institutions. So they should be kept separate also. And keeping them separate means that you are going to add two primary statements instead of one, which was becoming even more difficult because they were becoming too many disclosures, too many primary statements. So disclosure is there. Disclosure, we feel, is qualitatively important for the user of financial statement, because we need to know the user, as user of financial statement, I need to know whether my institution has discharged the responsibilities with regard to zakah and charity, and whether it has eliminated any Sharia non-compliant income from its balance sheet, from income statement, and balances from its balance sheet or not. For that all part, I think the qualitative disclosure requirement is very important, because our users of financial statements, one of the most important class of our users of financial statement is Sharia conscious stakeholders, and those Sharia conscious stakeholders need to know about how the controversial transactions or impermissible transactions were handled, how much amount of charity was allocated, how much it was paid, how much zakah was calculated, and how much it was paid, and in what avenues it was paid. So all these disclosures are important from our perspective, and I believe they have to be there. If we need to enhance the basis of conclusion, we will do that based on today's discussion, as I mentioned, and based on what discussion we will be holding in the working group and the board on that. With that, yeah, please.
I'll definitely check up the resources that you mentioned, Jazakallahu khairan. But in future, like you mentioned, just in case something is not a part of the resources, is there any ID or any such group or working group or part of which we can be? Is there something that you all have already formed that we can?
You have one email address, that is accounting@aoifi.com. Drop your email. We have an expert pool. Expert pool means that those people who are interested in giving comments to our standards, etc., we make sure that all exposure drafts, etc., are provided to them. With regard to all the resources, the board decides which resources need to be shared and which resources not to be shared. For example, our Sharia board has a decision that a dissenting opinion will not be shared. It will be minuted only, because they want to say that it is the board's decision. Only we will mention that there was a dissented opinion and we did not. So it is the majority decision of the board to approve this standard, not that one, because they feel that putting a dissenting opinion in the Sharia standard will be difficult to handle, and it may create confusions in the market. On the accounting, governance, and auditing and ethics side, we have a very clear decision of all of the boards that we will put any dissenting opinion, and we have put dissenting opinions in past. It is option of the board member whether he wants to give the dissent with name or without name. Similarly, with regard to all bases of conclusion, where we had a discussion, nobody dissented, but different views were discussed, and after which the board came to a conclusion, we provide the basis of conclusion. Now, more than basis of conclusion, we have received some recommendation that we should provide comment on each of the public hearing comments and each of the comments in writing. To be honest, it all involves significant cost, time, and it has been like, in past, our basis of conclusion were not that much detailed. Now you can see most important issues are all covered in the basis of conclusion, but the board's decision is, as of now, that we will not go beyond the board's decision. Which means that important, significant issues that board considers as to be discussed in base of conclusion. Some places they clearly say that you must explain it in the base of conclusion why we concluded it. For other areas, we identify the discussion in the board where there were different opinions, and why one specific opinion was taken. We put it in the basis of conclusion of the standard. If you need any specific explanation, you can always write to accounting@aoifi.com, and we can provide you that specific explanation in write with the standard and further details. If further information is needed or further clarification is needed, we have formed a technical accounting and interpretation committee, TIC, on the accounting side, where we will take your comments and will get the response to you. Either it can be a technical opinion to the individual only or the institution only, or it can be a public technical release also based on your comment. If the comment is very important, we can take it to the board, and board can consider issuing some specific guidelines on that as well. But in a nutshell, what we publish as basis of conclusion, we do not intend to publish anything beyond that. We do not intend to make anything available beyond that. It's not easy for a standard setting body to go beyond that, because it may even create more confusions in the market. However, any clarification that you need, you can always write to us. There are a lot of institutions, audit firms, our members who are writing to us. We are responding to them about important issues, at times at secretariat level, at times at the TIC level. So I hope that that we will be able to provide you clarifications as needed, and particularly with regard to what you mentioned today, I can assure you that some things are mentioned, I believe, already in the base of conclusion, but we'll make sure that these further explanations are enhanced there based on what I mentioned today, as well as based on what our working group and board will decide in this aspect. With that, I believe we need to move forward. We have very limited time, so I need to move forward first and give a presentation about the remaining part. So these are the general presentation requirements applicable to all institutions. So what would be the contents of the statement of financial position? What would be the contents of the income statement? As I mentioned, I'm not able to go through them because of lack of time, but we welcome all the comments to be received in writing on these. You can, if you have quick comments, you can put those comments in the question answer tab right now. Some of them I can answer, others we can take to the working group. But we want to actually, we want to like have your comments on these areas also. But these are, you see, these are improvements to some our earlier standard in line with some of the standards that are already finalized in between. Like, for example, Murabah standard was finalized in between. So we put in something clearly that, okay, it will be called Murabah receivable. It will not be called a Murabah financing, because the old standard called it Murabah financing and the new standard called it Murabah receivable. So it is just one example, but the point is that these are all improved to incorporate the newer standards, some of the IFRS requirements, etc. Then we have the statement of income and other comprehensive income. Then we have, with regard to statement of income and other comprehensive income, one major change you will see that we have brought in the appropriation on appropriation not in the beginning but towards the end. And secondly, like we have considered like issuing a separate statement on the quasi equity, as I explained earlier. Then statement of change in equity, it will be changed because earlier all the fair value gains, etc., particularly on sukuk, etc., and real estate investment, they were all going to a statement of change in equity. Now they will be going to the statement for the comprehensive income, and it will be more in line with the accounting our standard. With the IFRS as well as our other standards already issued. Then we have statement of cash flows, statement of changes in off-balance sheet assets under management, which I explained already. Then applicable to Islamic banks and other similar IFIs means that normally intermediaries, what they will do, whatever is in part 1, it will be there. But with regard to the balances with central bank, with regard to treasury receivables, etc. So these are the specific type of components of the financial statement that should be there, which are not there in other type of institutions, but they are more into the Islamic financial institution. So due to financial institution, due to other counterparties, quasi equity accounts, details, statement of financial position, tier 1 and tier 2 equity types. So these things are actually considered to be specific requirements which are applicable on banks and other Islamic financial institutions which are in the nature of bank type intermediary. So they have to cover that. Then capital management requirements with regard to Islamic finance are here. Solvency related requirements will be in the specific standard on the kafel. Then there are specific risk-related disclosures, and mostly these disclosures are more specific to Islamic financial institutions, which are in the nature of bank. So these are classification requirement, disclosure requirement for risk, quasi-equity classification, and other investment account, etc. Allocation of profits, how allocation of profit is done to them, and the quasi-equity statement, etc. With that, we come to the third part of the standard, that is authoritative status. And this is a very important point, that we say that conceptual framework is a part of the AAOIFI phases. Now, why we are saying it? Because some of the regulators mentioned that AAOIFI phases are adopted. Now, framework was not part of AAOIFI phases, so some of the entities were following phases, but when the phases are silent, they went to IFRS rather than considering framework first. Now, we very clearly clarified that conceptual framework is an integral part of phases, so anybody who adopts AAOIFI phases, it adopts the conceptual framework also. And then we put in the hierarchy of selection of accounting policies, which I discussed there, that first the AAOIFI specific phase, then phase on similar matter, then generally accepted accounting principles, insofar these are in line with the conceptual framework and Sharia principles and rules, then management judgment in line with the conceptual framework and Sharia principles and rules. And this is standard. We intend to complete the public hearings and finalize within this year, after which we will be allowing 1 year time. So the intended period of first year adoption, the effective date is 2023. 1st January 2023. Now, in this section, we have one important thing, that what other standards are withdrawn or what other standards are amended. So we have FAS1 withdraws the old FAS1, it withdraws old FAS16 on the transaction of foreign currency transaction. However, provision related to foreign currency operations are safe till the time they are covered by a new standard. In the consolidation side, FAS1 withdraws FAS26 investment in real estate. We believe that IFRS generally is not against Sharia, so we do not want to have a separate accounting, because this one was having a separate accounting treatment, which was one of the differences from IFRS and between IFRS and AAOIFI, which were not justified by either a Sharia requirement or because of the specific nature of the institution. So we decided to withdraw our standard, and we believe that IFRS on real estate is good enough. We can apply it with some of the guidance that can be provided in need basis. Similarly, it withdraws FAS22 on segment reporting. Then there is one important thing, that new FAS1 and the new framework have brought in some new terminologies, etc. So while we are revising some of our earlier standards, but these are the list of the terminology, like it was the term Mudarba financing, Mudarba capital, Mudarba financing capital. Now we are going to use the consistent term Mudarba investment, or instead of Salam financing, we'll call it Salam receivable, etc. So these are some of the terminologies which are understood to be corrected in the respective standards, but the respective standards are most of these standards are being revised as of this moment in time. So we intend to incorporate these things in due course rather than amending those standards separately. So this is understood to be amended accordingly. And particularly we wanted to put it here because people should be very clear that now onwards, when they adopt FAS1, they follow the new terminology, even if the standard on Mudarba or standard on Salam is using the old terminology, but they use the new terminology, because this is the new one approved by the board in line with the new framework, and it will be hopefully revised in due course in the existing standards also. Then there are some important standards where there are some important amendments, like FAS23. There is a control definition in FAS23 regarding consolidation, which was different from IFRS. So now we are bringing to the new definition, which is closer to IFRS, but it has our Sharia implications as well. So we try to bring it in line with the same. So Sister Farida, the point I noted there is here already. Involvement with such assets or business. It should be the same and consistent in quasi-equity and here and there. There are three or four places it has to be consistent. The FAS1 has replaced the following paragraph of FAS30. Wherever there is fair value through equity, because our FAS33, FAS30, they had the term of fair value through equity. Now, all those places where we had used the term fair value through equity, we are amending that treatment and we are changing the name and terminology to fair value through other comprehensive income, as well as we are changing them to the treatment. We are also bringing closer to IFRS, only with the exception that the relevant portion of quasi-equity and equity will be allocated appropriately. So to that extent, we will be different from IFRS. But other than that, the treatment will be more or less same with IFRS, because there was no other Sharia issue other than this allocation between the equity and quasi-equity. So these are mostly these in this paragraph, you will see that these are mainly the changes which are brought because of fair value through other comprehensive income versus their fair value through equity treatment. And some are the terminology which are there that we need to amend. So these all paragraphs, this whole table is providing these changes with regard to that. So with that, we conclude the presentation of the standard for now. I believe that we don't have time. Otherwise, we would have tried to show something something on the illustrative financials as well. But I'm understanding that time is over now. We have just completed the time. So so it's up to the participants if they want us to address a few questions now, or we can request the questions to be provided to us, because it was a long public hearing. It's already 3 hours. And it's a very comprehensive standard. If you want to discuss it for 3 days, you will have a lot of points to discuss. But let me take, like, I can see there are only 2 questions right now in the written one. So let me take these questions quickly and before we conclude. So first question is how you can help IFIs in implementing the standard if internal regulations do not know much more about AAOIFI standards. Is there any relationship between AAOIFI and other global institutions which is responsible for published standards for central banks? AAOIFI is working significantly now in collaboration with a lot of regulators. A lot of regulators are now part of our accounting board, governance board. Some of them will be member of our public interest monitoring committee. Some of them are represented in our board of trustees. But and not only this, we actually have an ongoing communication channel with the investment with these regulators. And one thing that we are planning right now is that AAOIFI should be conducting time to time regulatory roundtables or regulatory forums that we are planning. And actually the first one we are planning on this topic, the FAS1 general presentation and disclosure of the financial statements. It's, as you raised this question, I mentioned it, although it's still in the planning stage, but this is something that we intend to do, inshallah. And we believe and we highly appreciate your comment. We know that it has been our weakness, but I can tell you in last recent 2 years, we have established connections with at least 90 regulators around the globe. And as I mentioned, a lot of them are now, alhamdulillah, working with us. It includes the financial service regulators, banking regulator, insurance regulators. It includes accounting bodies. We are trying to collaborate with more and more of them. We are taking their members on our boards to be part of this. We are taking, even if they are not on board, we are selecting their members on our working groups, which actually develop these standards. So we are enhancing this one, but we highly appreciate your comment. We still feel there is need for that. And as I mentioned, that we are right now planning the first regulatory forum that we intend to do on a regular basis, but the first one will be on this standard itself. And the next question is, Assalamu alaikum, I have questions about how we can get the GL accounts tree for the Islamic banks. The GL accounts tree, to be honest, we are going to have the illustratives which can help you in having a GL accounts tree. But it will not be the GL accounts tree. But we, as AAOIFI, what we feel that is the need of the industry. So what we did on a more comprehensive part, what we did that there were some Islamic finance core banking solution providers who wanted to have AAOIFI certification. So for one of them, that is IMOL solution by Path, IMOL system by Path Solutions, we have certified that. To be compliant with AAOIFI Sharia accounting regulation, accounting standards. So you can approach Path Solutions for a full set of accounting system that addresses the requirements of AAOIFI and Sharia. There is another one which is in pipeline. We are at advanced stage, that is synergies by list solutions, which is towards finalization, but not certification is not yet issued. But there are at least 2. Then there are some more who have contacted us, but they did not go through the whole process. But there are some who have contacted us. Having GL account tree separately, I think, will not be very easy for you. You can take assistance from having from the illustratives that we are developing. But if you want to go for further details, I believe you need to approach these system providers. With that, the written comments are completed, and we have completed the time also. So with that, I would like to hand you over, Brother Rizwan, to conclude. Or shall we request from Brother Rizwan, it's back to you. Or you want our brothers from TKBB and KJK to conclude, or you want to conclude it? But from my end, it's like, thank you very much, everybody, for being here. Honestly, I loved it myself, and I hope it was interactive, and we were able to keep interest for you as well till now. With that, again, thank you very much for listening to me patiently and being part of this one. Assalamu alaikum.
Thank you very much, Secretary General, Mr. Secretary General, Brother Omar Mustafa Ansari. Definitely, I mean, speaking non-stop for last 3 hours is not an easy task, and and going through such a comprehensive standard and that so ably is also not an easy ask. So thank you very much for a very detailed presentation on a very important standard. And thank you very much for all the audience, all the stakeholders who have joined us from different parts of the world. It definitely was an engaging session as we wanted. And the whole purpose of this public hearing is to engage, right? I mean, it's important for us to receive your feedback, comments, and that comment and feedback can be of any nature. So thank you very much for all those who participated with us during this session and send in their feedback and comments. For those who still have feedback and comments post this public hearing, please do send in the questions or feedback through on accounting@aofi.com. There will be more public hearing on this FAS1 standard. We want to ensure that more and more people, the feedback from more and more people is incorporated within the standard itself, so that it becomes a reference point for the global industry. So I thank you so very much for everyone for making it a very interactive discussion. Of course, one particular thing that I'll try and request our colleague from TKBB to say a few words as well, and KGK if they like. But before I hand over to them, I think it's one important point that I would like to put forward again and stress upon is developing these standards, which is part of which is something that AAOIFI does and is mandated to do, is a very important task, right? However, that's the half of the job. We can develop the best of the standards, but if these standards are not adopted or used, then it's a half work done. So I think it's in this regard, it's a very important thing that countries and jurisdictions around the world, they follow these defined set of standards that are acceptable, adoptable, recognized, and comparable across the cross-border, and and that is a reference point for a global audience. So we truly believe that only the adoption and making use of these standards, for the benefit of the industry, we develop them. So the best use is to adapt them, or use them as guidelines as a starting point. And we as a standard setting body are there to develop the standards. We don't have the enforcement power, and the regulatory bodies in various jurisdictions, of course, have that enforcement mandate, and we request and urge regulators to play an important part in the adoption of these standards and best practices. Only through adoption and adoption of these standards will address the issue of, or we will minimize the issue of reputational risk, the issue of inefficiency, reinventing the wheel. Not everyone has that capacity to reinvent the wheel as well. So AAOIFI has done that. AAOIFI and other standard setting bodies like IFSB, IAFM, they have been doing, and they have done for last 30 odd years, this with the help of the guidelines, the feedback of scholars, leaders of Islamic banks and financial institutions, regulatory bodies, academic institutions from around the world. So if only we believe that there's no point of reinventing the wheel by others, regulatory bodies can adopt AAOIFI, IFSB, IFM standards from day one, and they can be used for institutions, for jurisdictions who are getting into Islamic finance. They can use these standards from day one, and from day one they will be using the standards which are benchmarked to the highest level. So I think it's very important. So a uniform appeal is there, and it needs to be a uniform practices needs to be promoted across the globe. So not everyone, so that we all of us, we avoid the issue of inefficiency, in lack of uniformity, and having being able to issue or deal with transactions that are cross-border compared. So AAOIFI issues standards for the global audience. It's not for any particular country or jurisdiction or sector in that sense. So that is something that I wanted to stress upon before we conclude the session. Of course, I'll invite my colleagues from TKBB and KGK if they would like to say a few concluding remarks. But I'm in particular thank to both of these organizations, in particular the individuals, Sister Fatima from TKBB and Brother Samit Arsalan, who's also our accounting board member, for all the support they have provided for this particular event. We'll also get, if there are any concluding remarks, after that we'll request all the panelists to switch on their video for a brief period so we can take a picture. Brother Samit, would you like to say a few words?
Yes, brother. Thank you very much. Can you hear me?
Yes, we can.
Okay. First of all, my name is Samet Arslan, and I'm from the Public Oversight Authority of Turkey. And as Brother Rizwan said, I'm also a member of AAOIFI Accounting Board. First, I would like to thank Brother Ömer for this enlightening and detailed presentation on a very important and comprehensive topic, maybe the most important standard of existing accounting standards. I deeply appreciate it. And as we all know, when planning an event such as this, it is imperative to gain the participation and interaction of the experts in the field. And I'm fully confident that it is exceedingly realized. And we are unfortunate to have you in person at this time in our country, but I'm sure we will meet face-to-face at upcoming public hearings or other events, and we will be glad to welcome you to Turkey. Once again, thank you very much, brother, and I would also like to thank Brother Majd, Sister Farida, Merjan, and other colleagues from the AAOIFI. I really appreciate all the hard work and sacrifices you have made for this public hearing event and for the AAOIFI itself. And I would also like to thank the Participation Banks Association of Turkey, especially Mr. Osman Akyüz, Mr. İsmail Vural, and Ms. Fatma Çınar for their collaboration. Thank you very much.
Thank you very much, Brother Samit. We have the Assistant Secretary General as well from TKBB and Sister Fatima. Would you like to say a few words?
Yeah, sure, Brother Rizwan. Thank you very much for everybody for joining this very educative and insightful discussion, which is the excellent example of feedback-driven standards. This is like a common brainstorming session for all of us with the guidance of Mr. Ömer Mustafa and Sari, how motivated us to provide feedback. This is like a case study for feedback-driven activities. Highly appreciated. As TKBB, we are very happy to be engaged with your good institution and taking benefits of your standards as a reference at our activities, and hope to come together at the future organization. And thank you very much for the event. Salams from Istanbul.
Thank you very much, Sister Fatma, Brother Samit, and also the Secretary General of TKBB and Mr. Mehmet from KGK for all the support that you have provided. Inshallah, we look forward to having or organizing more events of this nature, be it be virtual or physical, inshallah, in collaboration for the mutual benefit and for the benefit of Islamic finance industry. So thank you very much. With that, I think we are left with one last thing, unless any of the panelists or team member would like to say or anything. I think with that, can we just request all the panelists to switch on their video so we can take a picture? It remains a memory for us. It become part of newsletters and news, etc. So if we can ask all the panelists to switch on their videos, please, that will be very helpful.
Yeah, this is group photo session. Yeah.
This may take a minute. Okay, we don't have everyone as yet, but hopefully we'll be joined. Professor Najdat?
It says the co-host has asked you to start your video. Okay, let me start. Just before it was saying closed.
Okay, that wasn't the intention.
Yeah, I was sending the picture to you.
Okay.
Thank you.
Dr. Zaghari, how are you? You're well, inshallah. Okay, we'll just is any of the colleagues, would you like to switch on? Brother Majd, Sister Farida, Sister Majan, if you would like to. Brother Muhammad Bolif. Okay.
Thank you.
Thank you very much.
Thank you all of you. Thank you very much.
We have taken some clips. Thank you very much.
Everybody, thank you. Assalamu alaikum. Thank you. Thanks for the team for arranging it, and thanks for all the hosts and for all the participants for being there and for this active participation. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, colleagues. It's a pleasure to be with you. I think we have taken the pictures now. So thank you very much. Inshallah, we look forward to having you again in future events. With that, Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam. Thank you.
Thank you very much. Salam alaikum.
Thank you.